Hello, everybody. Welcome back to the stream. I am here today with one of my good friends, Jesse, aka Micro to Macro, my favorite macro economist. And we are here today to discuss Robinhood earnings. Jesse, how are you feeling?
Good, man. I'm hoping it goes better than PayPal. So what are you thinking?
I'm hoping it goes better than PayPal. We got about 15 minutes till we get the numbers and we'll talk and discuss our expectations. But in general, market took a dump today. I mean, this is probably one of the worst days for Robinhood to report. S&P down about 2%. How are you feeling about the CPI read that we got? And do you think it's going to have any impact on the actual earnings itself?
Yeah, I don't know. I'm not quite sure how I feel about it yet. I mean, most of it was shelter, like 2/3 of it was shelter. And the reasons behind that, I'm a little unclear on because Trueflation actually shows that shelter is dropping dramatically. I can actually, here, let me show you real quick. Let's do this. One sec. I'll share my screen.
Thank you, everybody, for being here in the chat. We got 15 minutes, and then we'll get earnings.
Yeah. So on Trueflation, if you look at shelter, you'll see that the other component has been plummeting, and really all of it's coming down. So there's got to be some kind of disparity in the numbers. I know they revise a lot of stuff after the fact. I was going to actually check out the Airbnb earnings after this one, since they're reporting today too. Just to see if I could figure out what's going on, because I don't know that I totally agree with the read. Again, Trueflation has us at 1.4%, and we hit what 3.9 on core. So, but I get the market's take on it. I mean, we're pushed out to June right now. We have a 75% chance in June of actually of lowering rates. So I mean, that kind of sucks. So I think that's having an impact on it too. But I really don't. In regard to Robinhood, I don't know if it matters. I think that Robinhood's going to do its own thing today. I think if they have really good earnings, the thing that scares me about Robinhood is the IRAs. They were very successful with their IRAs, and so I worry a little bit that they paid a heavy amount of fees, and I'm not sure what that looks like from an accounting perspective. So that's my big concern with Robinhood today. Outside of that, I think they're going to crush it.
How much money do you have in Robinhood right now?
About 200,000 in calls, roughly. I've got 2,350 for January 2025 at a 20 strike, and then I have a couple of others too in another account. So
okay, cool. Sorry guys if the Wi-Fi is not the best. I'm just going to exit out a bunch of tabs and that should clear it up. On my side it looks fine. Okay, so you have 200,000 in calls, and most of those are for $15 strikes in January 2025, correct?
20, but yeah, otherwise right.
20. Okay. So the reason I mean, we can talk about this for the next 15 minutes until we get into earnings. The reason you're bullish on Robinhood, I guess, I'm going to give my bull case, but what was the reason in the summer you decided to kind of load up on these calls?
I blame Arnie. So he is liable for anything that happens with this because he got me excited about it. He sent me a DM and I was like, hey, this is pretty awesome. And I started pulling it up, and just it led from there. I was looking for more opportunities after making just a shit ton of money on Palantir and Tesla and Meta, and then some Bitcoin mining stocks. And this was one of them that came up. And it's really, there's so much to be positive about. I'll let you do your take, but I've got a laundry list here.
Yeah, I mean, so I'll just read off the tweet I sent out about an hour ago. I have a bull and bear case on Robinhood for earnings, and I'll give what I think is going to happen after I read this. So the bear case is essentially that Robinhood tanks after every earnings. Robinhood has tanked about 7% for the past 8 quarters. So Robinhood does not have a successful history of doing well after earnings, particularly because some numbers aren't the best. And, 2022, we obviously had a really bad year. Trading stopped, or trading was just not as much as it was in 2021. 2021 was a great year, but they went public near the end of 2021, early 2022. Their average revenue per user went from Q2 2021 to $121 down to about $53 at the bottom. Last quarter was about $80, so I think that's going to come up. But the bear case is if MAUs go down, monthly active users, if ARPU goes down, if any other metrics, maybe they're not GAAP profitable because, as you said, they're paying so much money to get all these people to come onto the platform and bring their brokerages or their 401ks or the Roth IRAs, then the street's going to see that one metric. And kind of like PayPal, they saw MAUs go down, or total active accounts, and then they were like, you know what, screw it. We're just not going to give them the benefit of the doubt. The bull case is pretty simple. Crypto revenues are going to be up. Volume was up about 92% in October, 75% in November, probably going to be closer to that 60, 70% in December. Robinhood makes dollars on crypto, whereas they make pennies on options and contracts because they take a 0.35% spread. It's the lowest spread in the entire market. When it comes to brokerages, transaction revenues will be up because the market has done well. Assets under custody will go up. S&P is up almost 10% since November when they last reported. So in general, they're probably gonna have a lot more than $87 billion under custody. And assets under management, or as Jesse likes to say, asses under management, are gonna have to go up.
I think that was you, no.
Well, Vlad's gonna have his asses under fire today if this damn stock doesn't do well. But the point is, they're gonna have so much money they're bringing onto the platform. The question is the street gonna believe them in their long-term vision about that money is actually gonna allow them to have a plan to grow in the future, because now they just have so many people that are locked in for the next 4 or 5 years on their platform? Or is the street going to be like, you're overpaying for this, customer acquisition cost is crazy, you're just a brokerage at the end of the day, there's no reason to give you a premium, we're going to buy NVIDIA? So one or two is going to happen.
Yeah, and I can't discount the fact that the street definitely has the ability and proven record to be able to shit on fintech and disregard the fundamentals. I mean, they did the same thing for Palantir for years, right? So
correct.
It could be that case. I do have to say, though, I mean, the stock's down 86%. The IRA transfers, again, were so powerful that they had a 3-week delay, and Vlad had to come out onto social media and apologize for it. They have the UK expansion. They have the X1 credit card that we haven't even heard about yet. And they've been doing great across.
They launched crypto in Europe. It's all around Europe.
Yeah. I mean, and then all the product stuff that we were just talking about this week. It just gets better. Like what is futures trading, index options, short selling, joint accounts, tax lot selection, new analytics, Morningstar reporting, NASDAQ level 2 updates. So you get more timely stuff. There's just so many new things coming out on top of them being smart and trying to pull in IRAs. They already pulled in a ton of money in just like their money market type fund where if you hold cash and you got gold, they're making money off of you. And at the same time, they're paying you some of the float. And then at the same time, they're capturing those assets and then doing that with IRAs too. I think it's smart. It's smart to really build up your portfolio and get everybody putting your money on your platform. And they've got one of the best out there. So,
and real quick, just to prove your point about this money that's coming over. This is our good friend Josh, who's a big bull on SoFi. He brought in 1.68 million.
Oh yeah, at the 1%, I think. All right,
he got 17 grand.
Yeah, that's freaking awesome. I think he would have gotten 3 if he was gold, but it was a limited window.
Right. I mean,
that's a lot.
It's just kind of insane that they're doing this type of a match. They can only do this in a high interest rate environment. I was listening to Vlad the other day basically say, no one thought the company would survive in a high interest rate environment. And because Vlad is a founder and he got his first check for 25 grand to start Robinhood at a bar in San Francisco, this guy who's not going to give up. And he kind of figured out, well, wait a second, if we're getting a ton of money because we have $6 billion in cash and we're getting a ton of interest from short-term T-bills, how can we manipulate this cash to give it to our customers to get them to just bring as much money as possible? And if they figured it out and it's somehow inch out gap profitability, I think the street's going to like it. I just shared your screen as well.
Oh, cool. Yeah. No, I agree. And I think it's awesome that they did that. I think that it's great to put that to work in that way. And I think, I mean, long-term, again, they're locking people in for 5 years in these IRAs. And when people move IRAs, like, I don't know about you, when I move from one platform to another, especially if I like it, I'm not moving again.
Mm-hmm.
So, I mean, there's people, I've still got a checking account that I had when I was like 17 years old, man. There's people that don't move. And so to capture that wealth, and I just posted something today, a little bit ago, about how since the pandemic, the majority of the wealth creation is in the demographic under the age of 40. So that's pretty awesome. And again, I think that that's the kind of market they're capturing. And then they're bringing over money from whether it be like the money market type fund, the trading, or the IRAs. They're building a wealth platform here that's going to rock it. So I'm excited about it. I just hope that, again, they didn't overpay a ton and it doesn't just destroy their net income. We'll see.
Yeah, I agree. Anything you want to show from this chart, and then I'll
we can take a glance. Is it viewable? Let me see.
Yep.
Pretty easy to read. Okay, sweet. So, I mean, the big things are the revenue growth year over year was 29%. That's awesome. Monthly active users was dying down, but Vlad made it very clear in previous conference calls that they weren't focused on low quality users.
Right.
They were trying to build up wealth. And you could see that they were successful at that with assets under custody, average revenue per user growing. Net income was going in the right direction. Revenue segments building up, like I was talking about. Average user balance going up. I expect a lot of these to continue. Tons of cash on hand, like 5.4 billion, no debt. And let me see here real quick, under key charts too. So again, the cash sweep revenues, you can see all that money that we were talking about. And the number of gold subscribers has been growing quarter over quarter. I expect that to continue too. So I'm hoping net deposits go up. I'm hoping a lot of metrics get better than they have been with the push they've had. But they're headed in the right direction, and they're down 86% from the high. So years ago, because they were hated because of the whole GameStop thing. So I think that, like, just based on current valuation and the ability to bounce, if we could just get the market to where it's not, crapping on everybody all the time, and it gives these smaller caps and fintech a breath of air anytime in the next couple of months, there's a small fortune to be made here.
Yeah, because as you've been saying over the past couple of weeks, large cap has done really well in earnings. They've obviously did really well in 2023. At some point, that money's going to say, "Hey, we don't want to pay $3 trillion for Microsoft anymore, or at least for a while." And
or they want a better yield, yeah,
right. And your thesis is that money is going to go somewhere else.
Yep, totally agree.
Yeah, I think it's going to be really interesting. Okay, so what do you think is the bear case? How does this bad boy tank 20%? How does it pull a PayPal? How do we get something like that?
Ask a bear. I'm not a bearish person. I cannot succeed in this. But I mean, like I said, the IRAs, I think if they overpaid for the IRAs, if their net income gets crushed, the street, I could see a narrative where they're like, the only reason that they're getting any, higher average user balances or any of this other metrics going up is because they're paying a premium for it. I could see that being the narrative. It's a stupid one because, again, once you move these funds, they stay with you. I mean, history tells us that about every brokerage if you're good. And then again, these guys were smart. I saw some memes where they had people trying to get a Bitcoin ETF and grab onto it in the meme, and they were getting pulled away. And Robinhood's like, "Hey, we're there for you. If you want a Bitcoin ETF, we got them. Come to our platform. Here's the IRA transfers." And they did a really great job on social media trying to pull in those people. So you got older platforms and brokerages alienating people, and then you've got Robinhood happy to scoop them up. Yeah, there you go. That's the one. Yeah, that's a great one.
What do you think the ETFs for Bitcoin will have in terms of an impact for? I mean, it's not going to be in Q4 numbers, but this is why if there's a dip, I would be very excited to dip because, again, if it goes to $7 or $8, it is literally trading under the cash they have on the balance sheet. At this point, it's already slightly above the cash. So, do you think those Bitcoin ETFs eventually will turn into more transaction revenues from it?
I think so. I mean, it's yes. If the history of Bitcoin has anything to say about it, the entire time it's been around for a decade and a half almost, it will have a dramatic impact. And you can even see that in previous trading in 2021. Part of that was GameStop, but I mean, the rest of it was crypto. And if we do have a market that doesn't fall apart, if global liquidity is still strong, which I totally believe, I don't see it slowing down. And I don't see anything that's happening right now slowing that down. It maybe just delaying the lowering of rates where things really start to take off. But if the markets start to move, these will skyrocket. And I think that could happen in as little as, like, I don't know, some of these could start now, but as little as like maybe 3 to 6 months, we could see these launching, and hopefully I make a bunch of money off of it when they do.
Yeah, I think guidance is going to be important as well, but not just because guidance is important. In general, Robinhood is seeing a lot of users come to the platform to bring in a lot more money. So Robinhood has the ability to, and Vlad had that tweet that's like, look, if you miss your appointment to transfer your Roth IRA, don't call us for 3 weeks because we're booked. If they can use that sentiment to guide that their AUM is going to increase, and as a result of that, they think the gold revenue is going to increase or cash sweeps are going to increase outside of transaction revenue. So even if they don't know what the trading environment is going to be like over the next 6 months, if they can comfortably say, guys, we're going to add 100,000 people, we're going to get $500 million or whatever in assets, we're going to be able to make XYZ% off that, so we can project these revenues will go up. I think the street's going to be more comfortable thinking that Robinhood's not just a degenerate trading app, but they're a fully formed financial platform for people that actually want to use it.
Well, and you made a really good point about forward guidance too. I mean, it seems to be the only thing people care about anymore. You can pretty much shit the bed in the current quarter, but if your forward guidance is great, they're going to reward you greatly. So I think that's a really good point. I think that's going to be a big deal.
Yeah, it's gonna be very interesting. Shout out to my boy Derek. I don't know if you know this guy, Jesse, but he follows you very closely. He's a good friend of mine, and
Oh,
so
cool.
he's a big fan of your channel, big fan of your Twitter.
Yeah,
account.
I've seen him. I've seen him on there. Definitely seen him in chat.
Bitcoin getting to 50,000 is also very important, or at 49 right now, because Robinhood, for, I've talked to a lot of people over the past couple of months, just how they think about Robinhood. And these are crypto people that got into Coinbase at 30. And one of the guys I was talking to said he exited all of his Coinbase and he loaded up on Robinhood. And I was, trying to understand why. And he says that, Robinhood is probably going to do, in his opinion, what Coinbase has done, except that on Robinhood, now it's not only moving with crypto, because there's billions of dollars of worth of crypto on the books, not the books. They're a custodian of, that's about 120,000. They have about 1.7 million Ether, but you can trade the Bitcoin ETF. You can trade assets and you can buy Bitcoin for cheap. Like a waitress is not going to go to Coinbase and sign up for some cold wallet. They're just going to want to swipe up and, pay a small percentage of their dollar to Robinhood. If that's the case, I also think even if it tanks on earnings, Bitcoin doing well over the next couple of weeks should create a little bit of a floor to it and maybe a recovery as well based on what happens. Yeah,
agreed. I could totally see that happening. I think they're gonna do good today, but I thought that about PayPal too. So we'll see.
That's why it's like it's so hard. Everyone's like, "Yo, you're bullish." I'm like, I'm bullish, but I'm scared. Like I don't know what it like. It's like I want to be bullish.
Don't ring the bell too early. Let's not do that. We gotta look. We gotta look. We gotta read. We gotta give it like a good couple minutes for the algos to decide our fate.
So here's what I'm doing. I'm not even gonna look at the damn stock. I'm just gonna look at the press release. And I'm just going to be waiting for these numbers. It is 4 p.m., ladies and gentlemen. The market is now closed. We're going to get numbers very soon. And then we'll see.
Look at the stock. I will do that part.
Okay, so you look at the stock. I'll look for the numbers.
Sounds good.
This is exciting, guys. This is, we've been waiting for this day for a while. And now it's time to see. This is going to be a big call, too, because, again, they're going to be talking for a while about where they project 2024 going for them.
Yeah, I'd love to hear positive news about the UK expansion, anything with the credit card. I really want him to sell all the great things that they've been doing and are doing and are going to do. I'll be really happy if he does that. And he can do all right in the calls. He's definitely better than Alex so far. Cameron says a mid-dressed like hood reached $50.
Oh boy, man. Let's see. This is the fun about investing in a company and putting your thoughts out there publicly and taking the risk of putting out your ideas and thoughts into the world. And now we got to see what ends up happening.
People certainly make you accountable for them. But, man, I look at it this way. If this thing goes up, if I got 100% return on Hood, I can make 10x. So I really don't care what people think. It's going up. It's going up. Our numbers
are up. I'm not looking at the stock. I don't care.
Don't do that.
I've had my history with that damn stock. I am waiting for the news, folks. I'm waiting for the news. I'm a news boy. I'm a news carrier. I deliver the news to your house. All I'm doing is I'm waiting for the news. That is it. That is it. The news. I'm waiting for the news. All I want to do is read the fucking news and know if my money's going to go away. Okay. Jesse, I don't get why these companies don't just put it out at 4 p.m. Like this is like, what's going on right now? What's going on right now?
Well, and maybe it's out there, but we can't hit it. I'm trying to check too.
Oh, let me go on Twitter too. Twitter probably.
Yeah, sometimes they get ahead.
Where's Gergevin? We need some good news from Gergevin.
Yeah, he's really fast.
I need some good news. Dude, when I get the Bloomberg terminal, it's over. It is absolutely over.
I was going to say Gergevin last time, I think, was in PayPal and Baba, and both of them just got destroyed. So hopefully he's not in this one.
Yeah, someone said just hit 25. I hate you, Joseph. You're so annoying.
No, he did not hit 25.
I think I got something. Revenue looks like it's above 450.
Okay, let me hop over here. Revenue.
I'm getting some mix. I got one chart. I don't know if that's real.
Yeah, I don't know if this is real. I'm looking too on X. I'm not seeing anything yet. I'm gonna go back over to Hood here.
Let's see.
Where's Robinhood? You got your stuff out. I'm gonna go to overview. Is it blog Q3? Yeah, they don't have anything yet. I think that it's just people are getting excited again. This is just like PayPal.
Yeah, dude. That's why I don't care what's up right. It could go straight down right at like a firm. Yeah. A firm went up 9% and then it just collapsed. It was.
Oh, did it do it too? I didn't watch that one.
Shit is PayPal. I almost got on Wall Street Bets twice, dude. Thank God CleanSpark was in the middle, and so no one was able to clip it. Yeah. But if it happened like PayPal, it would have been 2 in a row.
Yeah, you never make it on there when you're doing something that's really great, right? Like that's not the time they post about you. It's the time you ring the bell a little early.
It's also just the hardest day for them to report, dude. I mean, everyone thought every bank was like 2.9, then 3.1. It's like, well, no one expected that. That wasn't in the plans.
Yeah, we'll see how it plays out. Come on, Hood, where you at? When does the call start off again?
I think at 5. Yeah, usually it's 5.
Okay, cool.
So we'll have a good hour to dissect this. Yeah, not out, guys, yet. Not yet.
Oh, we're going up fast again. I think it's out.
I'm just waiting for the news. I don't care about the stock. I don't know what a stock
Jesus,
is.
going up real fast.
I don't know what up or down means. All I know
there
is
you
that I have to report the news.
Great way to think. Great way to think.
Oh, Upstart and Airbnb are tonight too. Yeah, we'll take a look at Upstart and Airbnb right after we look at Robinhood.
12%, almost. Right.
I don't know what 12% means. All I know is that could be up or down. Why is it on the fucking website, dude? Someone said
I don't know. I don't see it yet.
All right, I'm going to Twitter.
Let's just ring the fucking bell and get rid of it.
Oh, Jesse,
right, 15%.
They made a profit. They made a profit, Jesse.
Sweet, 15%.
They made a profit.
Very interested to see what the financials look like.
All right, so I think they made
okay. Let me pull that up.
3 cents a share.
Okay,
$30 million in profit. It looks like.
That's great considering what they've been doing.
Oh, here we go. We're out. All right, here we. Okay, so download.
Right,
okay, you see this? Here you go.
Yeah.
Robinhood record 2023 record revenue is 1.9 billion, 37% year over year, 471 million in Q4. Net positive transfers from every major brokerage competitor fuel strong net deposits of 4.6 billion in Q4. GAAP net income of $30 million. They ended up getting a profit. I can't believe that either, dude. I can't believe that. All right. Vlad says 2023 was a strong year as our product velocity continued to accelerate. Our trading market share increased and we started to expand globally. And we're off to an even better start in 2024 as we've already bought in more funded customers and net deposits through the first half of Q1 than we did in all of Q4 2023. So that means in the first month and a half of Q1 2024, they brought in more funded customers and net deposits. That means they've done more than 4.6 billion in the past month.
Yeah, it's all those IRA. It's all those people that were pissed off and trying to get a Bitcoin ETF, and then their promotional offer and awesome social media presence.
But that's just insane. In the first month, they're already up to Q4. Yeah. That's incredible. All right, Jason, the CFO, says we delivered significant profitable growth. We drove record full year revenues at substantially higher margins. In Q4, we had positive GAAP net income. This can be interesting to see how they figure that out. In 2024, we aim to continue delivering profitable growth as we work to maximize earnings per share over time. So they want to continue to be profitable, like a little Palantir.
That's awesome. I love that setup.
Okay, so here are the specifics. Transaction-based revenues, 8% to 200 million. Crypto, 43 million. That's up 10% year over year. Equities, 25 million, up 19%. Options, 121 million. That's down slightly, 2%. Other revenues, 30% year over year to 35 million, primarily driven by higher revenues from gold subscriptions and Sherwood Media. Interest revenue is up 236 million, 41% year over year. They made a profit. Net deposits, 4.6 billion. Assets under custody is 102 billion. That's up from 89 billion last quarter. So that one's up a lot. Cash and cash equivalents. Yeah. Oh, wow. Look at this. Okay. So I got this number right. I thought they would have 1.42 million gold. They have I said 1.4. They have 1.42 million. So that's up 25% year. That's people paying $5 a month straight cash, or $7, something like that. This one's tough for the street. MAU decreased 4% year over year to 10.9 million. But that's actually up from last quarter.
Oh, is
right?
it really?
Last quarter was 10.3. Last quarter was 10.3. Yeah.
That's perfect. And honestly, that's a metric that doesn't even matter.
It doesn't matter at all.
That's great. Yeah, that's great. The fact that they actually increased that is that, they had one little hiccup in Q1 of 2023 where they increased it too. But this is great. So like the metric I was expecting to be down is actually up too. That's great.
Okay,
that's
so
awesome.
Guidance, they're expecting they only give we expect GAAP total operating expenses. They only gave expenses for guidance, but they didn't give revenue yet. So they're probably going to say that on the call. Okay, let's go to the stock, Jesse. Let's talk about the stock. Where is the stock at? And then I'll try to get
stock isn't bad. We can share my screen out if you want.
Stock. Yeah, I got it.
Yeah.
Stock's up 10%.
Yep. It was actually up about 14 at one point, but it's sitting good. And I don't think this one is smashing back down as long as Vlad doesn't go apeshit on this call or say something stupid. I think we might be able to ring a bell by the end. Maybe we wait until the end of the call.
Maybe we wait until we wait until the end.
We wait.
For this to get back down to what? 11:30, 11:40, 11:50 during the day, something would have to happen where the street's like, no, we've read it wrong.
Yeah, they find something they didn't realize or something is said in the call. Like otherwise there's no reason, man. This is great.
Yeah, this should be pretty good. All right, man. I mean, let's try to find the full deck and then we'll get through the actual numbers. But guys, I know I'm not yelling and super excited right now, but like they're profitable, and profitability is not easy to do, not with all the money they've been getting out, and they're guiding to continue to be profitable, which is, just incredible. It's absolutely. I'm sharing your screen right here, so you can.
Oh, sorry. Here, let me switch over.
If you want to share that. Let me just share mine real quick, and we'll do Airbnb real quick. So Airbnb, let's check out these guys. They have earnings. They are up 9%.
Ah, damn. I was hoping they go down.
Airbnb killed it so far. And then the other one, Upstart, is why is it halted? Wow.
It's halted?
What the fuck happened to Upstart?
Are you on the short time frame where you can see here, let me see. That's crazy.
Yeah, I'll show yours.
Oh, here, let me see.
Weird. Upstart halted. I'm gonna get their results out to you guys, and then we'll go through everything. Upstart. And then I'll pull up Airbnb as well. Yeah, man. Yeah, I mean, so it's up 7.6% right now. It's trying to maintain this. There's probably a bunch of after-hour sellings, people taking some of their profits, but there's more buying than selling so far. And I think going into tomorrow, if they don't fuck up the call,
I think it actually looks good. I know we're wary of saying that, but I think it does. It's almost 10% right now.
Dude, no, 10%, 13. The fact that they did in Q1 in a month and a half, 4.6 billion in deposits. That means they're going to get closer to 7 billion in deposits by the end of Q1. The street has to price that in and be that profitable.
Yeah, there's nothing bad in here. This is great.
I don't think there's anything bad. The one thing I think we were all worried about is that the IRAs are going to cost too much. They're not going to be profitable. But I think, they started charging people 3 cents for the options contracts. So that also, probably added up for them and just helped in gap profitability.
Yeah. And the best part is, and I think with a 3% match, they were making people sign up for gold membership for a year, and I think they'd be charging like $10 or something. Right. So they're locking people in. They're locking them in with fees. They're going to make a lot in transactions. They're just going to have a much richer customer base than they had before.
Correct. All right. So I'm going to start reading these off, guys. We got the deck, and Jesse, just if you want to get any comment, you can stop and you can stop me here. So funded customers, 23.4. They added 110,000 last quarter. These are net accounts that actually have $1 in them, and 420,000 year over year. Assets under custody, that's a big one. 65% year over year. That's because the market is up from Q4 2022, 19% sequentially. Obviously, the market's done well over the past 3 months. Net deposits, 4.6 billion. That's big. They did, again, I'll say this again, they did 4.6 billion already in Q1. They have 60 days left, 45 days left of Q1. So if they double that.
Well, and they were losing deposits for a year. So the fact that they're back up to that level again and growing is awesome.
Gold subscribers, 280,000 year over year, 90,000 in the past quarter.
Cool.
Not bad. Okay, so net revenue is 471. That's up 24% year over year in terms of 471 million, 1.865 billion over the past 12 months. Adjusted EBITDA, 133 million. Operating expenses, 364 million. So that is up year over year. That makes sense because they're paying out money for the IRAs. And they put in a $30 million profit. They figured it out somehow. They're going to tell us on the call how they did it, but they did it. Stock right now up 7.76%.
Yeah, what do we have here? This is their timeline.
Yeah, so so they're basically showing what they did in 2023. They announced Sherwood Media. They had crypto wallets, Robinhood Connect, stock screeners, 24-hour markets. That's a big deal, especially when they expand internationally. X1, they'll probably say something on the call what they're going to do with X1. Higher retirement match. That was huge in August. Bitcoin, Dogecoin, Ethereum swaps, 5% APY, 24-hour market. United Kingdom.
Yeah, these guys are not resting on their laurels, man. They're just go, go, go. Vlad is a good CEO.
Yeah, for anyone who thinks Robinhood is just the GameStop aims, like you, this one slide lets you know they've been working. They are absolutely trying to transform this business.
Yeah, it's awesome. Roadmap. Yeah, what do we have here?
Okay, so winning the active trading. So what they want to do is they want to win the trading market, index options, futures. They want to put up the credit card for increasing wallet share, gold and retirement enhancements. They want to expand internationally. UK brokerage EU. So it seems like 2024 is the year to dominate the UK. The UK's allowed public.com, but they haven't allowed Robinhood because Robinhood has been so big on payment for order flow, even though they said they're not going to use payment for order flow in the UK, but they're still waiting for official announcements from that.
Very cool. It's a great roadmap. These guys are so impressive. Thank you, Arnie.
What did Arnie say?
No, I was just thanking him for.
Thank you. Stock right now up 8%, 420,000 year over year to 23.4 million in Q4. That's amazing. AUC increased 65% year over year, again, 103 billion.
That's impressive. That beats out every other number that came before it. That looks great.
Yeah, as you can see, the breakdown too, options is the smallest, 18 billion. Crypto's at 15 billion, and equities is 69 billion.
Nice growth, man.
And then cash is about $1 billion. So users are holding about $1 billion in cash.
Yeah, just waiting to be applied.
Right. Literally. Retirement accounts, 490,000. Okay. Retirement assets under custody, 1.7 billion. So they added 600 million last quarter. And they have about $3,500 in assets under custody per account.
That's beautiful. That retirement AUC is sick. That is impressive, man. They went from nothing to 1.7 billion in a year. That's great.
That is huge. Net deposits are up 21%, 27% over the past 12 months. What is this? Average cumulative net deposits tend to grow over time across our funded customer cohorts. That makes sense. And recent cohorts, initial net deposits are larger. So there's two things they're trying to tell the market right here. They're trying to say, hey, once we get a customer, even though we're paying a lot for them, they're going to keep putting money into the platform. So we're going to make the money on the back end.
You just have to get larger and larger and larger.
And second of all, we're getting all these wealthy people that don't mind using Robinhood over Fidelity, and they're putting in millions of bucks.
Yeah, they're getting the under 40 crowd that have seen their wealth grow by a much higher percentage. So this is great.
I want them to talk about this a lot on the call. This is a big thing for the street to understand. If the street gets this, they're gonna understand what they're trying to do. $81 ARPU in Q4. I don't think that's changed from last quarter. Last quarter, I think it was close to 80. So it's not like they
it's real close.
That. Yeah, but at least that is still inching higher. Transaction-based revenue is up 8% year over year to 200 million. This is the fear, though, that I have, that when rates come down, when rates come down, equities have to go higher for this transaction-based revenue to go up because they're making the majority of their money on net interest income right now. And if they don't do that, they've got to be able to make sure there's a mechanism to still generate a lot of revenue.
Yeah, my primary focus is about like global liquidity and macro. And I can tell you, man, I just don't see that going away. And the money printers have to go burr. We've got an election year. There's just there's so many reasons why it should continue to go higher. And these guys are going to be a direct benefactor of it. And then with the options play, like a 10x return, you just win once with one of these and you got your whole year.
And so your argument from a macro perspective is that there is so much global liquidity that is existing and that's going to continue existing that will get stocks to go up, and then Robinhood is going to benefit off the transaction revenues from that.
Exactly. And there's like the bank term funding programs going away. There's a bunch of like fancy acronyms that people use. The reverse repo is starting to run out. None of that matters because the Treasury is still printing long-term bonds, and that's how they're funding themselves lately. They're not doing it with short-term coupons. And so there's stealth liquidity that isn't going away. And it's not just here. I mean, you got the Chinese government, you got people saying that they need to inject $1.4 trillion into their economy just to keep their stock market up. And then there's just every other country in the world, and then the largest number of elections and recent history in the last couple of decades. And you just have a bunch of people that want to keep their jobs, a bunch of people that want to keep things afloat. And we also printed in the United States, we printed 40% of the money supply that's ever existed just since the pandemic. There is a ton of money just waiting to buy. And a lot of the money last year was scared money. I made 700%. Most people didn't. Most people weren't even in the markets. They weren't doing what we're doing. So they had, again, the worst bond route in a couple of 100 years, going back to the 1700s. So these people that thought they were being safe, they've lost a ton of money.
Right.
And that safety didn't buy them anything. And what they might not realize yet is bonds are still probably going to suck because the issuance is going to be so high. And so I don't think they're going to find safety in that. I think they're going to find safety in investing. And they're not going to want a 4 or 5% return. They're going to want a bunch more. So
we got the 10-year right now at 4.322. And so, I mean, yeah, what you're saying here makes a lot. And that's also your bull case for crypto, right? Because if we're having this money printer go burr, you know,
crypto does well. I mean, Bitcoin is the scarcest asset on earth. It's immutable. It's something that's easily transferred. You can transfer it anywhere on earth. It's not tied to any corporation, any country. It's not tied to anything. And so it's like, it's the best uncorrelated asset in the world. It can actually work in deflation and inflation. So I mean, that all of it looks good. And we're up almost 12% right now, 13%. That's pretty good for this late. I mean, people have read this report, so it's really all in the call now.
Yeah, 1330. It's holding. Sean made a good point here. He said these are good numbers, but we're still on a channel since early 22. I agree. We are still stuck between $8 and $13. We've got to crush through.
Yeah, we do. We definitely, from a technical level, we need to get above 14 and turn that into support. But we need to start with 1350. So here,
we're looking at your chart right now, so you can go ahead.
Yeah, let me switch to a different time frame so this looks a little prettier. But he's right about this. We need to get out of here. We need to start turning this into support. But in after hours, what are we at right now? 1350. Yeah, okay. So in after hours, we're at 1350. Let me go back to the weekly here. Sorry for jumbling around. So we're right about here. So we're pushing up against this resistance line. If we can, in the next day or two, or even today, get above this, get up near that .786, above like the 14 range, start to turn that into support. We're seeing higher lows. I mean, outside of this, we had higher lows. I think that's an anomaly. And again, it's down 86%. I don't know what people are looking for in this thing. It's down 86% from its high.
Wait, so let me ask you a question here, Jess. What the pushback to that is that it never should have been that high during the ZERP era.
You could say that, but even then, you can only say that so much. I mean, this thing is like 30% of the market cap of Coinbase, and these guys are profitable. So,
oh shit, I forgot about that. Coinbase is not profitable. Well, they might be in a couple.
Barely. I mean, they probably will be this quarter, but they've been no better, and they've got the custodying solution and all this other stuff, but they haven't been delving into all the realms that Hood is. They haven't been producing and creating technology at the rate Hood has. They've just got the blessing of 9 Bitcoin ETFs, but these guys are a third of the size. And they're stealing from all these old boomer ass brokers, and they're taking their client base, and they're going to keep doing that because they're innovating and they've got the best mobile app I know for investing. So
when someone says Schwab and Fidelity have a couple trillion in assets, is your argument, and so they like kind of are like Robinhood is whatever, is your argument was like, no, that's the opportunity for Robinhood, is that their market cap is so low and they don't have that money that eventually
Robinhood will feed off of them. Every old person that dies off and passes money on to their grandchildren or children, they're gonna go to Robinhood or places like it because they have better tools and they're innovating more.
Right.
And so that's innovation works, right? You can see it in the numbers. They're getting better, even though they had this horrible narrative for so long where nobody would invest in them again because of what happened with GameStop and Citadel and all this crap. Even with that, they've been able to just hit the ground, work, get it done, build, and be able to turn themselves around. And the stock will follow. When you've got a stock that's depressed by 86% and it's doing this formation, I mean, this is how I made a ton of money off of Meta, Tesla, the mining stocks, Palantir, over 600 grand. It's the same formula. We're in an amazing opportunity. Normally, I don't even touch options. I can go years without touching them. But when you have setups like this, and if the macro can hold, I mean, look at today. Look at today. What was today for the stock market? We're up almost 12% right now. The stock market total.
Airbnb just lost all of its gains.
Yeah, good. That makes me happy. That's what I wanted to hear. I have a thesis, and I need to look at the reporting, but I have a thesis that the other lodging and the fact that we're seeing, almost deflation in the shelter within Truflation. I've got a feeling that is also going to play out in Airbnb stock, and I want to see it there. And then that'll let me know if I'm seeing it there too. That'll help validate my thesis that the Fed and their CPI is wrong. So I want to see Airbnb suck.
No, but it's interesting because Airbnb lost their gains. Lyft, I think, is up 27%. But again, Robinhood was, I mean, we haven't been ringing the bell yet because, we're kind of just like, is it going to lose their gains? And it's been, 24 minutes? Lyft is up 32%. We'll talk about that in a second. It's holding on. It's holding on.
Crazy.
So, and yeah, you made a lot of money off Meta, Tesla, and Palantir in 2023 because you saw depressed assets that fundamentally had nothing wrong with them, but needed a catalyst. And for Robinhood, it seems to be this kind of IRA match to get more users. And so you see things that are down 80%. Meta was down 80%. Palantir was down almost like 90% or whatever. And that's where the opportunity was from an options leverage standpoint.
Yeah. So I saw three things. I saw a macro that was being incorrectly characterized and had the wrong narrative, right? The narrative at the time, at the end of December, beginning of January 2023, was the sky is falling. You're an idiot if you invest in this market. But then there's brilliant people like Michael Howell from Cross Border Capital who monitor all these metrics of global liquidity. And he's one of the most brilliant bond macro economist type people you can think of. And he said, this is insane. We can clearly see that global liquidity is going up. And then I looked at Truflation. The other narrative is that inflation was going to stay higher for longer and that it was going to be bad and that we're going to keep going up. And yet the actual data from Truflation didn't show that. It showed that it was already dropping. And so I followed Michael Howell and Truflation, and then I looked for opportunities, and these opportunities all look like this. These just didn't trigger because of the high rate environment. They really want rates to come down. Fintech, banks, Hood, they're going to do really well with a lower rate environment. So people might think, oh, but they're making money off the money market. That'll be nothing compared to what they make from transaction revenue once people get excited and they start buying stocks and everything else. And so I think that I think there's tons of opportunity. I saw the macro though. I saw the fundamentals within these companies, and then I looked at the TA for the setups, and that's how I made a ton of money last year. And I made my 700% in gains was just from making sure that you look at everything.
And that's what you got to do. The TA has to, because it can't just be depressed. It like Robinhood, for example, has been in a channel for 22 months, and your argument is there's probably a lot of institutional accumulation during these times. And once it breaks out, and it doesn't.
Yeah, or the institutions could be totally stupid too. They could be just as bad as retail. A lot of them follow trends. So, I mean, what you're waiting for really is you're looking towards the future and trying to say, what do I think the future is going to look like? Okay, I think it's probably going to be pretty good. I think, fintech can do all right in the future. I think macro stays strong. We're not seeing unemployment go up. So if all these things are true, where can I find asymmetric opportunities? And I want to try different ones to where if one of them succeeds, I make a ton of money. That's how I made 700% last year. And that's with this one. I mean, if we go to 31, I make more than 10x off my investment.
Yeah.
And that would be 150% move. And I can make, 1,500%.
Sorry. Okay. So no, and that's the thing about the asymmetric return is that's what your channel is kind of built on, right? This idea that you can find these opportunities.
What I do. Yeah, it's what I do, man. It's how I invest. And you could go down like this right now. This year, I'm probably down like 28. Well, I mean, I might not be down 28% across my portfolio, but I'll take if I can have 700% in a year, I'll take 29% down the next year. I don't care because it's still an order of magnitude higher than everybody else.
Right. Okay. Let's go through a couple more numbers, then we'll get into the other earnings. We'll have the call at 5 p.m. guys. Sure. So adjusted operating expenses increased 14%. That makes sense given all the stuff they paid for with IRA. Diluted share count decreased by 5% in 2023. We anticipate dilution of 2% in 2024. Okay. That's not horrible. Cool. Stock-based comp in Q4 was 81 million, which is down significantly from where it was 2021. So that's great. We've designed a 2024 expense plan to drive profitable. This is great. This is exactly what you want to see. So
Yep.
we've designed a 2024 plan to drive another year of profitable growth, including investing for growth across new products, reducing costs in existing businesses. This leads to a range of 1.8 to 1.9 billion of operating expenses. At the midpoint, this is 5% above 2023's 1.81 billion operating expenses. This outlook does not include potential significantly regulatory matters. So they believe they're going to make more than about 1.95 billion of revenue, because that's going to be the amount of expenses. If they're going to be profitable, they have to put up at least 1.96 billion in revenue, something like that.
Yeah, and if I'm right, they're going to do more than that.
Yeah, I would imagine. GAAP net income was 30 million, 3 cents a share. They didn't explain why, so that's in the call. They'll probably explain why. And they would have been profitable last quarter too. They had a small, not really small, but $100 million
fine. Q1, they had a ton of accounting stuff. So, like, again, the trend is definitely up.
Right, 100%. 100%. With over 5 billion in corporate cash, we are well positioned to continue deploying capital. 5 billion, 3 billion lines in credit, 5.3. So 5.3 billion. So if you're buying the company at a $10 billion market cap, you're basically buying 5.3 billion in cash. So the business is worth 5.7 billion. Like, it's maybe worth a little bit more than that, right? I think that's what they're trying to say to the market.
And I think over the next couple of quarters, as Bitcoin and crypto take off, that we could see that narrative become very powerful behind these guys. Very powerful.
Starting in January 2024, we will align our net deposit definition with market practice by including dividend and interest inflows and gold fee and margin interest outflows. Okay, so that's just an accounting thing.
Yeah, it's cool though.
And then December, okay, we finally got the metrics on December. So crypto was up 50% in terms of volumes. And then you had net deposits of close to 2.2 billion. Wow, look at this. They add in October, they did 1 billion. November, they did 1.4 billion. December, they did 2.2 billion. And so far in 2024, they did 4.6 billion in deposits.
That's a trend you want to see.
This is a company bringing a lot of money onto this app. There you go.
Being very smart. That was a great way to deploy cash. The IRA program was awesome.
That was a hell of a pivot, dude. That was a hell of a pivot going into a high interest rate cycle. Absolutely incredible.
They've done well.
All right, so now we'll wait for the call. Stock's up 15%, folks. I'm not ringing the bell because I still don't know what the hell is going to happen. And
I feel like you could blame it on me if you ring the bell.
No, we got it. Vlad's a good talker. He's not like Chris. He's not like Alex Chris.
He's better. He's better. Chris has to he just has to get used to it, I think.
Right. He can. So we'll see what ends up happening with Vlad. Okay, not bad. Let's talk about some of these other guys. So Airbnb, give me a bear case on Airbnb. Let's expand on that. Why exactly?
It just ties with Trueflation and the reporting. The fact that they've indicated that other lodging is down significantly, and it's actually negative, like 2.5%. Other lodging to me is the number one thing that comes to mind is Airbnb. So I want to see weakness in that sector. And if that is true, when we see weakness in that sector, I think that some of this is going to start to spill over into the CPI data that comes up. So I don't care so much about the stock. I care more about like the macro impact of what's going on in their world.
So for you, it's less about the company. It's more so about what it means for shelter inflation.
Yeah. I might rent an Airbnb soon, but I don't care about the company.
Okay. And then we got Lyft. Does this make sense to you? Up 50%? 54?
No, that's crazy. But I mean, that's the kind of environment we're in, right?
Right.
We're in a stock picking environment. And I love that. This is a super bullish environment in my mind, where if a company does well, they have strong guidance, they hit numbers, they can go up 54%, which is insane. So that's going to bleed over, and that's just going to swash around from one stock to another stock, man. It's how it works. Parabola starts off with the big dogs, right? It's going to be, it's the NVIDIAs, it's the chip makers. And then after they just make too much and all the AI companies, then it drifts over and it starts to go to the rest in line. And so today it's Lyft and a little bit, 15% on Hood, but it will eventually just move around to everybody because the money, everybody's looking for yield and they're hearing about the next great thing. And so people and human nature, they chase. 90% of people chase. They don't look ahead of time. They don't buy back Palantir, 2 years before it takes off. They don't do that. They look at you and they go, Amit's making a bunch of money. It's time to buy Palantir. And then they jump in. And so that's human nature, and it's going to just go everywhere. there's going to be so much money flowing around. It's going to be insane. And I'm ready for it. I got my asymmetric bets.
Lyft. Let's talk about that real quick to see how the hell it's up 50%.
I don't know. How much did they beat by? Here, let me look over.
These numbers are, I'm just looking at them a high level overview. You look at enough of these, you start to realize there's nothing that stands out. There's nothing here.
4% year-over-year revenue growth.
Yeah, come on, dude. How is the stock up 50% right now?
The net loss was 26.3 compared to 500.
Who's buying Lyft, dude? Where is Carl Icahn in this? What's going on?
It must be really depressed. Like they're just happy that they aren't burning as much money.
But that's insane, dude. 2% year-over-year growth and or 8%
low bar, I guess. Yeah, and Robinhood has been down for like 2.5 years, and it deserves to go a lot higher too. But it'll get there. That's the way I look at it. It's a laggard right now. It's only up 14%. Oh well, I'll cry later.
I'm looking at the short float on Lyft, and Lyft has a short float of it's only 11%. It's not that crazy. 11.63.
Could just be nobody paying attention to it too. But spending has been better for a while. The short interest was probably insane after the pandemic started.
Right. Correct. Yeah, Lyft was a company that went down almost 70%. So the fact that it's up 50% is really exciting, I think, for a lot of people who were in this one.
13.74. What was Hood short interest? I need to go back and look here.
It was like 8%. It was nothing crazy.
Oh, darn. I was hoping it would be more.
Okay, Upstart. I'm still trying to find it, guys. Upstart is still halted, I think. Upstart is not. Yeah, why is it halted? Does anyone have any idea? I'm pulling up the earnings, but.
Yeah, let me see here.
Was it that bad they have to halt the damn thing? Like,
that's a great question. Yeah. Let's see if I see anything on X. Halted news pending.
Oh, wow. So someone says it should be down about 30%. They guided for 125 million in revenue and 75 million in losses for next quarter.
Oh, wow. Okay.
But why is it
halted pending news scares me. I would not want to be in this stock.
Yeah, good luck, guys. Results. Let me share this. Here's what we got.
Good luck to whoever owns Upstart. SoFi was the better play there anyway. PayPal, SoFi, all that stuff.
100%. 140 million. Wow. Negative 4% year-over-year growth. They lost 47 million, and it looks like they're guiding to lose more in the next quarter.
Yeah.
For those that don't know, Upstart is AI-based lending. They try to use AI to come up with a plan to lend you money. That's like the gist of it.
Evidently not a very good one.
Not a very good. One of my boys who just texted me, he's one of the guys who, I don't know this guy. He's just somewhere across the world. He made a shit ton of money off Coinbase at $30, got out of it at 150. He somehow found me on Twitter in December. We connected, and he gave me his thesis on Hood. And he let me know in that moment in December when I was loading up that I wasn't crazy. So he was very important for me to talk to. He just said, congrats. Awesome. It's so crazy with like the financial universe, dude. You have a thesis, but you don't want to seem like an idiot. You're about to put about your money. So you reach out to people, someone like you's help me like try to understand this stuff. And it's just cool when sometimes maybe it's up 15%. It plays out, you know?
Yeah, no. And honestly, like the FinTwit community too is amazing. And like there's really good people out there. There's a bunch of shit talkers too, but for the most part, there are people that are constructive and that can work together to provide information to where we're all smarter and we're more up to date on the news and we can make better decisions. I love it, man. I think it's a blessing and I'm happy to be a part of it.
Yeah, it is pretty incredible. For those that are not following Jesse on Twitter, please make sure you follow him on Twitter. I'm putting his Twitter in the chat right now. And if you're on Jesse's channel and this is your first time to me, you can follow my Twitter. That's in the chat right now as well.
And follow me on YouTube too, Micro to Macro. I'm out there.
Yep, and I'm putting his YouTube right now in the chat as well. Everyone here, if you're subscribed to me and you're on my channel, please make sure you subscribe to Jesse. His YouTube and Twitter's in the chat. I watch his videos every day. I get a lot of insight, a lot of information. So definitely make sure to check him out.
Yeah, I'm a bad boy, so do the same.
Upstart is down 22%. Okay, so it's not halted anymore. It's down. S&P is actually up a little bit after hours. Robinhood's carrying the market a little bit, maybe. Robinhood's still up 14%. We'll see if that holds through the ER. Here's a question: are you going to sell any of your Robinhood tomorrow, based on it being up 15%?
Probably not. I mean, it all depends. If we get a 40-50% launch, yes, I will.
Right.
So I can't say one more. So if that happens, yes, I will, because I could make like, I don't know, almost $1 million or something. So I would sell a decent chunk if it did that. Leaps are options are momentum based vehicles. Theta decay, or the decay, happens over time. So if you make a ton of money in a short period of time off of them, it would be stupid not to take some off the table. But if it doesn't, like, let's say we just hover around here in this resistance zone, or I guess I don't have it sure, but if we hover in the current resistance zone around like 1350, yeah, if we do this 1350 to like $14 range for a while, I'll hold. I would feel more comfortable selling around 1737, and a lot more comfortable around 30, because again, I get my 10x then, and I've got $200,000 plus in this one, so a 10 bagger would be sweet. I'd take it.
Give me your, well, real quick. Peace Chess, thank you for the $5 super chat. He says, I have $12 calls, 13.8 break even with August expiration. Thoughts on whether to let it ride? The simulator on Robinhood says it will be up 60% tomorrow.
Yeah, they probably will. And I would sell that shit in a heartbeat, because if you haven't watched my options 101 video, look it up and watch it. Short-term options are how you lose all your money. You're the guys that give it all up so that people like me can make it. So if you got a really sweet deal and this thing moves, GTFO.
Yeah,
move on.
I agree. If you're up 60% tomorrow and they're expiring in August and you don't have 2025, 2026.
And then buy leaps, man, because mine are January 2025. So I've got at least like 6 to 9 months to hold these things. And I could still make 10x the underlying asset if they go up a lot. So I could still do insanely well, but I don't have all the risk.
Right. And remember, PCS, you know, it says August expiration, but correct me if I'm wrong, Jesse, about 90 days before they expire, that's when theta decay gets really tough.
Yeah,
so
it's
you really have till June.
Yeah, if you're significantly out of the money, and or the time is getting much shorter, it will just burn. It'll burn. And so nobody should be in short term. And again, August isn't horrible. I'm saying short term. That's like 6 months. Maybe you bought them as a leap and you've held them for a while. That's possible. But for me, it's the longer the better. So like right now, I just bought Tesla calls. I got about 100,000 worth that I've gathered in the last week. But those are June 2025. And it's a 330 strike. And I can get 4 to 10x the underlying in the next 1.5 to 2.5 years. If we can get, 150 to 300% from where we're at. And that would be not even a doubling of the previous high over 2.5 years.
Right.
So, and I can make 10x. So I don't know. I look for asymmetric opportunities, but make sure that you do it over a long time frame so you don't get effed.
What would you say about a $20 call for January 2025? That's the ones you have, actually.
That's better. That's what I have. Yeah.
Right.
And that's okay. Honestly, though, I mean, I'm in them because I'm in them, right? If I had to, January 2026 wouldn't be bad, because that gets you a little bit after the peak, or maybe even like a June 2025 if it's out there. I don't know if it is, because then you're near the peak of the Bitcoin cycle, and that should be a really, really profitable, high interest environment around that time. And so that's probably like peak gains.
Right. Lyft is now up 62%. So congrats to those who had Lyft options. Those are going to print tomorrow. Robinhood selling off a little bit, up 10%, not up 15% anymore. Now, again, it's got to hold. We got a big earnings call tomorrow morning. We'll see what happens, but it's a tough environment for any company to hold gains. So the fact that they're up 10%, and again, the business, this is what I said after Palantir. Palantir ended up holding its gains, but the business itself did really good in the earnings, right? Regardless of what the stock did.
Yeah, that's all I care about. I like SoFi did great too. There's just worry about the economic environment, people looking for rates to come down. But like I care about the fundamentals and whether they're doing well and headed in the right direction. And these guys are crushing it. So I'm more than happy to hold. I'm patient. Plus, I'll get a lot more than those Lyft people unless they bought calls.
Vlad is on CNBC in the morning. Okay, cool. So we'll cover Vlad in the morning.
Cool.
Jesse, can you give me some TA on Palantir? People are thinking 24. They missed the boat. Do you think we should wait? Or what do you think about Palantir?
So I like the asymmetric things, right? Like that's what I love. Let me pull up Palantir real quick here. So to me, I see too much opportunity cost with Palantir right now. So I'm not on for this ride. And the reason I'm not is I think we could actually trade anywhere between like 25, 26 down to like the $18 range. And we could do that for a while. Now, there's one thing that could happen. Fundamentals can always override. If people get happier about the macro and or we get like S&P inclusion is a big narrative, that crushed it for Tesla. They had a PE of over 1,400 that driven by S&P inclusion. And I think that got them another 150% in gains or something. So, and that's where they peaked, was the S&P inclusion. So S&P inclusion, maybe that gets us above 30 and gets us up to the previous high. But then I would probably be out because I don't know what the narrative is going to be next. Sure, there's big contracts coming, but when you've run already on Palantir, it was as high as what, 317% gains from the bottom where we started looking at this, in December of 2022. Yeah. That's freaking sweet. I don't like, if you're going to be in Palantir in a heavy way right now, it's because you're just trying to be supportive of the company, in my opinion. Right. It's not for the upside gains from here. So I don't love that. Not when I can look at, a Robinhood and see, good growth and a recovery story that can get me 10x the underlying. I struggle. Like 10x is a great number. That's the number.
Like even options on Robinhood, you would have to go a little bit more out of the money to get the asymmetric gain, which means you're betting Robinhood. I mean, not Robinhood. A Palantir gets to like, what is it? $40-$50. And even within 2 years, you think that's a little.
I wouldn't. Yeah, 2 years, maybe you do get to that, but I would never buy options for something that's up over 300% in less than a year or right around a year. I wouldn't do that. That's just, it's done too well. You buy the options like I did back in, May of 2023 when the stock was in the 7s. That's when you buy the options for Palantir. You don't buy them at 24. In my opinion, that's that, because you're paying a huge premium and it's more likely to erode over time instead of going up. We want the spring to be set. We want the launch. We want the recovery story, and that we got that beautifully with Palantir. And I wouldn't even be surprised. I still think, like, don't get me wrong, I think Palantir can get to 30. I think that's possible, but I think it's going to be hard to get above that and stay above that in a substantial way without something major happening.
Right. And S&P inclusion might do it, but that's not something that.
Yeah. It could do it temporarily, but that was also the news event for Tesla, right? So if you got to pop off of that, I would definitely, clean house and sell some and move on to other trades, investments.
All right. So Robinhood's selling off a little bit now, up 7%. Again, it's very hard to hold gains in this economy. Unless you're Lyft, you got 60%. So we'll see how this ends up playing out. Again, my thing, and I think Jesse's thing, is that the business was good. And look, if you're holding it for at least 18 months, 14 months, you've got time for this narrative to play out. The Fed hasn't even cut rates yet. If you're in weekly options, then the short-term thing really matters. But if you've got some time, if you're just holding the stock, this was a damn good quarter, dude. Again, for those that are just joining, $4.6 billion last quarter they've done in a month and a half in this quarter, which means if they replicate, that's going to be over $8 billion bucks. Which is just going to be incredible.
And if they get above 14, if they get above like that 1350 to 1415 range, and they start to maintain it above there, it's game over. It's game over. Right. And from a technical standpoint, all these guys will look at this and they will rush in because they'll want to be a part of the ride. And on social media, it'll be that way too. We'll be talking about our gains and how set up it is for launch, and everybody will be doing that, and they'll all feed off of each other, and it will go.
Tell me about Bitcoin. I'm sharing your screen. We touched 50. Yeah. Psychologically, that's important. I think the market's due for a little bit of a pullback. So if the S&P were to fall back 5 or 10%, I mean, how do you think Bitcoin is going to perform over the next 6 months?
I mean, it's almost completely brought back its losses today.
Right.
So it's set to go. I still think that Bitcoin gets at least to 65,000 before the halving. So I don't think it cares. It's an uncorrelated asset. There's still liquidity out there. Whether or not people like earnings, whether or not they're worried about rates staying higher for longer, I don't think it matters to Bitcoin. Rates staying higher for longer means more money printing. Whether it's long dated bonds or coupons or what, it doesn't even matter. It's more money printing, and Bitcoin loves that. It feeds off of it. It's like Pac-Man. So I still think we hit 65K before the halving. And maybe even higher, man.
But who would be doing the buying to get to 65K? You think it's FOMO because the ETFs have already bought, right? Like,
Who
so
isn't? Well, no, they haven't. I mean, the inflows are ramping up on the Bitcoin ETFs. We're actually seeing an increase. Let me see here if I've got, I think I got a bookmark for this. Let me just see real quick. So first off, Bitcoin is a little bit bigger than this right now, and it can eat all of these pies, all of them, every single one of them. It can take a chunk out. So there's that. But here. So this is the flows. And if you look at the price, we're going to look at the price of Bitcoin in a second. So right around the 21st of January, that's where we saw peak outflows from Grayscale. And then also around that time, about the 28th, we saw inflows into these other Bitcoin ETFs really start to ramp. And they're continuing to do that. This is like a day or two old. But with those inflows, if you go back and you look at the Bitcoin price here, and you start to look at when we launched, it's January 22nd. So literally as the outflows started to slow and then the inflows started to pick up at these ETFs, we started to just launch. We launched from the 30s all the way up to 50,000. And honestly, it's only going to get better. There's ordinals where the Bitcoin miners are making a bunch of money off of ordinals. The Bitcoin miners are going to launch and people are going to make a bunch of money. You know what people do when they make a bunch of money off of Bitcoin miners? If they get worried about it, they sell some of the miners or their options, and then they buy the Bitcoin miner stock. And if they already have the stock, they sell some of their stock, and then they buy the Bitcoin ETFs.
right,
Because that's the safety play, right? They're deleveraging themselves from a multiplier to one that doesn't have it. So they still capture that upside. They lock it in, but then they lower themselves down into something that doesn't have the multiplier, which lowers their downside risk, but still gives them an opportunity to make a bunch of money off of Bitcoin if they stay in. And it's not even just that. It's not just the Bitcoin ETFs. It's not just the ordinals helping prop up the Bitcoin miners. You have potential ETFs coming from South Korea and Hong Kong. And then you have the halving event happening. And then you have the potential for lowering rates in a couple of months. I don't even care. It's 75% chance in June now. Whatever. I could wait till June. I don't give a shit. And I think that it'll actually probably still be May, but we'll see. I thought it was going to be March too, and I'm pretty sure that's out of the cards. But so you have global liquidity, you have lowering of rates, you have the halving event, you've got Bitcoin ETFs. This thing is just,
and then you got FOMO if this thing gets to 55 or 56.
Well, let me say this too. So FASB accounting rules changed. And so the Bitcoin miners and MicroStrategy, this is why they jumped so much recently. FASB accounting is something they're allowed to do now, and the rules go into effect mandatorily at the end of this year. That's what I didn't realize. I didn't realize that they could voluntarily start at the beginning of the year. So that's why CleanSpark launched. That's why MicroStrategy launched. That's why the miners are going ape shit. But the bigger story there is that corporations now, any corporation can start investing in Bitcoin on their balance sheet instead of just holding cash. And now they don't have unfair accounting practices. Before it was an intangible asset. Now it's tangible. And all that means is that before they had to take whatever the lowest price was on Bitcoin, an incredibly volatile asset. And then that's what they had to write it at, which just screwed their books.
Right.
But now they can write it at whatever it is at the end of the quarter. So from an accounting perspective, it's awesome. So I actually call this the Trinity. It's the triple halving. I was originally calling it the double, but it's really at least a triple. And so we've never seen anything like this before. I think this is the greatest wealth generation opportunity of people's lifetimes. And this was 2017. And I think that we're going to definitely see something more epic than what happened last cycle, because it got neutered just like SPACs and memes and shit coins because of the fact that the Fed started to pivot from inflation is transitory to we're going to hike at the most aggressive rate in history. And so that killed the market last time. That's why we had this double top. That's not even normal in Bitcoin's history. We would have went higher. We probably would have went to like 93, but we didn't because of that. And I think we're going to make up for that and a whole bunch more. I think that this thing can go from 150 to 280.
I want to ask you another question about Bitcoin real quick. Lyft went from being up 60% to being up 14%. Why do you think that happened? Do you think there's some manipulation going? Like, what the fuck is going on?
I know people love to use the word manipulation. I think that things usually happen for a reason. Yeah, that's fascinating. God, I hate the people that FOMO'd into that, man. Jeez, just got wrecked. That's worse. Anybody who just dealt with that, if they FOMO'd in to 60% up,
and now
it's down to that, that's way worse than the cowbell last video. I gotta say, it's way worse.
Yeah, Robinhood went down from 15% to up 8%. I'd rather have that than be up 60%.
This is more stable. And again, I think this is a narrative changing moment, and that's all I care about, man. I care about narratives changing with assets that can go asymmetric and that are down 86%. So I can't see that. I mean, this is a positive narrative. I can't wait for the call. What is that, like 7 minutes?
Yeah,
that's going to be fun. I can't wait to see what Vlad has to say.
What do you think about Coinbase, Jesse?
It's a good. I think they're going to do good. I mean, they're literally the brokerage and custodian for 9 of the Bitcoin ETFs. I mean, that's a huge number. That's awesome. And they're going to make a shit ton of money. They're going to do well. But again, as far as innovation goes, they aren't doing any of the stuff Hood's doing. Hood could have a better selection of crypto. I would love to see that. I would love to see them actually have more, especially since the regulatory environment is a lot better. I don't think they've really changed the cryptos they have available. And I think that could lower them as far as the potential for transactional revenue. There's a lot of good stuff out there that's on Coinbase. I think that I would love to see it in this call too, say something about the fact that they're going to be updating their listing. I would like to see that too, because I don't think they have the same concerns that they had, during the last cycle when they were getting slammed by Citadel and everybody that lost money in GameStop. And then it's just not the same. They're good now. They can add more cryptos.
Do you think the ETF and the institutional custodian product they have is going to take away from the overall volume of trading on the platform, since people will just buy the ETF, or do you think that's still bullish?
No, they'll still trade. People are degenerates, man, especially when they start making a bunch of money. It's just human nature. It's like this is just the advanced version of video lottery, except in this one, if you're good with math and you take the time to learn, you can actually make a lot of money and not have it rigged against you. So it definitely, degenerate gamblers love this, and they'll come in. They're the ones that come in late, right? They're the ones that'll come in. They'll come in when Bitcoin's at 150,000, and they'll be calling my phone and be like, Jesse, hey, I know you used to be big into crypto. Should I be buying right now? And then I'll tell them, no, you shouldn't. And call me earlier. I can tell you when to buy, but you don't listen to me then. And then you wait until it's 150K. And then you ask me about it. And I'm going to tell you no. Like I did a post recently. I told people that now is the time to FOMO in to miners. I told them, actually, once I found out those FASB rules last Thursday, I think it was, I told people, you got to watch this video and buy miners right now. And then I think, CleanSpark's up 50, 60% since that time, maybe more.
Yeah.
Because I realized what was going on. I didn't know it was the FASB, but now is the time to FOMO. Now is the time to FOMO. You don't want to do it a year from now when everybody else is. Everybody else, when they start to rush into the market, that's the time I'll be dialing out.
All right. And again, guys, none of this is financial advice, but it's,
I'm a high school dropout. Don't listen to me. I don't know what I'm talking about.
Okay. We got about 4 minutes of the call. Jesse, are you bullish on ETH at all? Or no?
I am a little bit, but it's hard to know. I think Solana's probably could have a more asymmetric bet to it. It's just got more transactional revenue. It's got more developers jumping into the platform because the fees are so low. I don't know if it's an actual better product outside of the fees being low. It's very centralized. It just died for half a day or something, or 5 or 6 hours here just last week. Didn't affect the price much, but I think with Ethereum, it's deflationary. So Bitcoin's big narrative is it's going from 1.8% inflation roughly down to 0.9, which is great. That's going to be better than real estate returns. But Ethereum is actually deflationary. Sucks for fees, but they've got layer 2 solutions you can invest in. But with it being deflationary, it's deflationary by 0.25% a year. So that asset is physically getting more scarce. The new supply is not outpacing what's getting burnt. So I think that's awesome tokenomics. Hi, Kelly. I think that's awesome tokenomics, and I think that could crush it. So I'm invested in Solana, Ethereum too.
So you think the trade of the next 18 months is going to be Bitcoin, the miners, and then potentially one of your fintech plays, which is either PayPal or Robinhood, maybe so.
I think over the next it'll vary. Shit coins will go in there too. They'll be huge as well. But yeah, if you were lumping them in with Bitcoin, then yeah, here's what I'm hoping. I'm hoping fintech can take off over the next 3 to 6 months. If I get 10 and 20 baggers, like I can do with some of these, I will pull that 10x win out. I'll pull a 5x win out. I mean, that's what I did with Palantir, but I'll pull 500% out, and then I'll put it just to asymmetric opportunities, especially if for some reason Tesla is still getting beat up. I've got June 2026 calls. I'll buy more of those, man. I can get 4 to 10x on those. I will throw it in Tesla. I will throw it in Bitcoin, and I'll be happy to make a bunch of money. And then I'll look for other opportunities where I can make money too. And I'll hedge more. I'll definitely hedge more.
And the election year thesis also is your argument for why rates are going to get cut, and that's just going to increase liquidity. Because everyone says the market goes up during an election year. Your point is that in this cycle, it just means rates are going to get cut.
Well, I think maybe less about the rates if the Fed stands alone and isn't political, which whatever. But the rates will help. It's an accelerant. But the Treasury, Janet Yellen, has let us know that she's not slowing down on printing bills, man. So it doesn't really matter what the rate cuts do. I shouldn't say it doesn't matter. That's a lesser impact than Janet Yellen just printing money. And Congress doesn't have to print the money when the Treasury is doing it.
Right.
Here, I'm gonna hit
very interesting. Okay. Yeah. All right, guys.
Mute my image.
I'll just mute you. Don't worry. I'll mute you.
All right. Thanks, dude. Be right back.
Okay. So we got the call in. Oh, in 5 minutes. I should say 5 minutes. We'll start at 5, but it might start a little earlier or later. Not bad, man. Robinhood up 8.9%. Let's see what happens. It was up 15, now up 8. Whatever they say on this call is definitely going to determine if the market continues to be bullish. But in general, besides the actual stock price, the company performed. I mean, they performed very, very well. This was a hell of an earning. So for anyone who's in Robinhood, shout out to you guys. We'll see how this goes. This thing could still go negative after hours. Maybe it holds its gains. We'll see after the call. But I'm curious how the hell they got these gap profits and how do they think they're going to profitably grow? The narrative has changed for Robinhood. It is not a meme stock app anymore. If they're going to profitably grow, bringing in $5 billion a quarter, it's a big deal. Still got music. Okay. Did you see Lyft action? Yeah. Lyft is, where's Lyft? Robinhood's up 9%. Lyft's up 17%. So I think something's going on in the markets that's manipulating Lyft. I don't know how you can go up 60%, then go up 8%, then up 16%. But that's what we're seeing right now in Lyft. Joe says, I have a PayPal earnings call vibe for Hood. I don't know, dude. Vlad is different than Alex Chris. All right, we're starting, folks.
Thank you for standing by and welcome to the Robinhood Markets fourth quarter and full year 2023 earnings conference call. At this time, all participants are in listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during this session, you'll need to press star 11 on your telephone. If your question has been answered and you'd like to remove yourself from the queue, simply press star 11 again. As a reminder, today's program is being recorded. And now I'd like to introduce your host for today's program, Chris Cagle, Vice President of Corporate FP&A and Investor Relations. Please go ahead.
All right. Thank you, Jonathan. And thank you to everyone for joining Robinhood's Q4 earnings call. With us today are CEO and co-founder Vlad Tenev and CFO. Before getting started, I want to remind you that today's call will contain forward-looking statements. Actual results could differ materially from our expectations, and we have no duty to provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments we continue to monitor, are described in the press release we issued today, the earnings presentation, and our SEC filings, all of which can be found at investors.robinhood.com. Today's discussion will also include non-GAAP financial measures. Reconciliation to the GAAP results we consider most comparable can be found in the earnings presentation. With that, let me turn it over to Vlad.
Thanks, Chris. Hi, everyone. We're going to try something a little bit different today. I'm going to keep my remarks brief so that we can spend more time on Q&A. Robinhood's focused on 3 things. Number 1, winning the active trader market. 2, increasing wallet share as we deepen relationships with our customers. And 3, expanding internationally. I first off want to congratulate our team for a strong 2023. Trading market share was up 14% for equities and 19% for options year over year. Gold subscribers were up 25% to 1.4 million, and assets under custody exceeded 100 billion, fueled by the strength of our 27% organic growth in net deposits. And we've launched brokerage in the UK and crypto in the EU. A couple points to call out. In Q4, we finished with $1.3 billion of net positive brokerage account transfers into Robinhood. And we've already exceeded that total halfway through Q1. We've been taking trading market share for some time, and now we're winning net asset inflows from every one of our major competitors, averaging over $100,000 per transfer. And as for funded customers, we've already grown more in the first half of Q1 than we did in each of the last 8 quarters. So I love the momentum we're building, and I'm excited about 2024. Before I discuss our roadmap, let's have Jason review our financial results.
Thanks, Vlad. It's good to speak with everyone today. We had a strong Q4 and 2023, and we have a lot of momentum starting 2024. Looking at 2023, we delivered significant profitable growth with record full-year revenues, record adjusted EBITDA, and record adjusted EBITDA margins. We grew revenues 37% to $1.9 billion, delivered adjusted EBITDA of $536 million, which is more than 3 times our prior high, drove 124% incremental margins as revenues grew by more than $500 million, even while we lowered costs, and we expanded adjusted EBITDA margin to 29% as we make progress over time towards the 50% plus levels we see from incumbents. And looking at Q4, we delivered 3 cents of positive GAAP EPS. Aside from the regulatory charges last quarter, Q4 would have been our 3rd straight quarter of positive earnings per share. Q4 was also our 6th straight quarter of positive adjusted EBITDA. We're pleased with our results in 2023 and aim to continue delivering profitable growth in 2024. Let's move to our 4th quarter business results. Assets under custody finished Q4 back over $100 billion for the first time since 2021. We delivered strong Q4 net deposit growth at a 21% annualized rate, and we're focused on driving net deposits even higher by improving our user experience and value proposition. When we look at historical customer cohorts, we see they have consistently added to their net deposits over time, which we think provides a strong foundation for sustainable long-term asset growth. And newer cohorts are starting with balances 1.5 to 2 times higher, which is even more encouraging. We're also delivering growth in Robinhood Gold. Compared to our average customer, Gold subscribers in Q4 had more than 8 times the assets with an average of about $40,000, grew net deposits more than twice as fast, and have adopted our products at higher rates. Gold subscribers are up 25% year over year to 1.42 million. Gold ARPU is multiples of our average customer, which includes Q4 annualized recurring subscription revenue of $85 million. This Gold growth brings our adoption rate up to 6.1%, and we're working to take this even higher as we keep improving the value proposition. We also have strong momentum to start the year as we added another 60,000 Gold subscribers in January alone. That is nearly 3 times the monthly average we saw in 2023. Our team is also hard at work on new credit cards for Robinhood customers, starting with something special for Gold customers. Currently, for funded customers with our historical X1 credit card, they have an ARPU of over $300 on credit alone. That's nearly 4 times our current average. This represents another opportunity for us to diversify our business and introduce new products to our customers who have a median credit score of about 720, and 2/3 of whom are Prime or Prime Plus. We look forward to sharing more about our plans with you soon. Now let's turn to financial results. In the fourth quarter, we generated net income of $30 million, as total net revenues increased 1% sequentially to $471 million, and total expenses came in better than our outlook. Looking at Q4 revenues, transaction revenues increased as crypto notional volumes nearly doubled, and other revenues grew as we saw early traction in Sherwood Media and added more gold subscribers. These increases were partially offset by the anticipated decline in net interest revenues from lower SEC lending demand across the industry. I'd also note that our monthly metrics now include total SEC lending revenues, so investors have even more visibility into the drivers of our net interest revenues through the quarter. Looking at fourth quarter expenses, adjusted OpEx was $364 million, performing better than our outlook even while we increased our growth investments. And for share-based compensation, it was $81 million, in line with our outlook. This combination drove Q4 adjusted EBITDA of $133 million, up 62% from a year ago. Now let's move to our 2024 outlook. We aim to deliver another year of revenue growth and margin expansion. Looking at revenues, with the current macro backdrop, we're planning for strong growth in 2024, driven by continued 20+% net deposit growth, increasing gold adoption, double-digit gains in trading market share, exciting new product introductions, and our diversified revenue model. And the year is off to a great start. January net deposits were nearly $4 billion, of which about 1/3 was net positive transfers in from other brokers. That January result was the highest monthly total since the first half of 2021, and we're seeing continued strength in early February. Looking at expenses, we plan to continue investing across new products, features, marketing, and international, while getting more efficient in our existing businesses and managing headcount growth all in to low single digits. Our 2024 outlook for combined adjusted OpEx and share-based compensation is $1.85 to $1.95 billion, which is up 5% at the midpoint from last year's $1.81 billion, excluding the founder award cancellation. This range includes about $85 million of quarterly share-based compensation, similar to our run rate for the back half of 2023. As for timing, we anticipate Q1 will likely be in the upper half of our implied range as we lean into marketing investments to start the year. We also continue to closely manage our share count. In 2023, diluted share count decreased nearly 5% due to the purchase of 55 million shares in Q3. And in 2024, we expect to manage dilution to 2% or less. We believe this plan positions us to drive profitable growth again in 2024 as we grow revenues and expand margins. We'll have to see how the year plays out, but so far, we like the growth we're driving to start the year. I also wanted to share some perspective on the interest rate backdrop in 2024. First, when we look at the forward curve, the implied average Fed funds rate in 2024 is roughly the same as it was in 2023, making rates a fairly neutral input for revenue year over year. Second, of our $30+ billion of interest-earning assets, less than half of that is rate sensitive because we pass the vast majority of cash sweep interest onto our customers. So as rates move, we do not anticipate a significant change in the yield we earn on cash sweeps. And third, and most importantly, declining interest rates tend to support growth in assets, balances, and trading. So we think 2024 is the year when we'll see interest rates shift from being a headwind for our business growth into a tailwind. In closing, we had a strong Q4 in 2023, and we have a lot of momentum to start the year. We remain focused on driving profitable growth for shareholders as we work to maximize EPS and free cash flow per share in 2024 and the years to come. Now I'll turn the call back to Vlad.
Thanks, Jason. As we enter the year, I want to highlight some of the areas we're most excited about to drive growth in 2024 and beyond. First, for winning the active trader market, we're going to continue to invest in our user experience on mobile, where we're currently #1 in market share. In addition, we will be launching a more feature-rich professional offering on the web for active traders. And we're also working on expanding our selection of tradable assets, in particular with index options and futures coming later this year. Second, to grow wallet share, we're focused on increasing gold memberships and net deposits. We plan to keep investing to make Robinhood Gold even more valuable for our customers and build off the early success of our retirement offering. At the same time, we also plan to launch new products like credit cards and add new account types such as joint accounts. And third, for international expansion, after launching crypto in the EU and brokerage in the UK, we have tens of thousands of international customers so far. What we're hearing from customers is that they want more of the full Robinhood product suite, so we're working to build that for them. We're also pursuing opportunities to expand into more jurisdictions. Reflecting on the past 4 years, we've tripled our customer base and grown revenues nearly 7 times. When we look at all that's in front of us, we're excited by the opportunity to continue growing Robinhood significantly from here. And we have a ton of momentum to start 2024. I want to thank our customers and team for a great 2023. The team's been working incredibly hard. The roadmap is full. There's so much to do. Now, let's move on to questions.
Thank you, Vlad. For the Q&A session, we'll start by answering the top 5 shareholder questions from Say Technologies, ranked by number of likes. We passed over questions that we already addressed on this call or in prior quarters and grouped together questions that shared a common theme. After the Say questions, we'll turn to live questions from our analysts. So I'll kick it off with our first question from Say. This one's for Jason. Your stock price is down 70% since the IPO. What do you have in place to get your stock price back up? Is a dividend in the works to at least provide some return on investment?
Thanks for the question. We're hard at work on the inputs to driving value for shareholders. In 2023, we increased revenue by over $500 million and grew adjusted EBITDA even faster. And we're focused on driving revenues and profits higher in 2024. Over time, as we deliver on these inputs to the business, I think the stock price should follow. As for capital returns to shareholders, last year we bought back about 6% of our shares, and we'll continue to look for ways, especially efficient ways, to deploy our capital, including investments in growth, M&A to accelerate our roadmap, or returns of capital to shareholders over time. But right now, to your question, we don't have any plans for dividends.
All right. Thank you, Jason. The next question is for Vlad. Vlad, what will it take to get Robinhood to the next level, to start competing with Fidelity and the rest of the most common brokers?
Thanks for the question. So for starters, I think Robinhood is already competing with Fidelity and the rest of the common brokers. If you look at active traders, we've been growing trading market share by double digits. So that's not just volume, but market share. We won head-to-head net asset transfers from all the other major brokerages in Q4, and that includes Fidelity. So that means that more assets actually flowed from Fidelity to Robinhood in Q4 than the other way around. And so to take it to the next level, we're really excited about our strategy. We think there's so much more to do for active traders. The roadmap is full, and that includes investments across a slew of areas. One, making sure that the user experience remains best in class and continuing to invest there. Adding new product innovations that our competitors don't offer, such as 24-hour market, new asset classes like futures, which our active traders have been really excited about and asking for, and new account types and more of the table stakes features that we just still have to get to. So there's a lot to do. And I should also mention, not a lot of the brokers have adopted new technologies like crypto, and that's an area where we're continuing to invest, and I see us extending our lead throughout 2024 and beyond. Increasing wallet share. We've talked a little bit about the success we're seeing in driving net account transfers from other brokers. We think that there's a lot of headroom. There's a lot of improvements in our passive offerings like retirement. The roadmap there is full, and we're very excited about the credit card. And international, we did launch in the UK for brokerage, crypto for EU. That expands the addressable market quite dramatically. Not a lot of the common brokers even have an international presence to note. And I think over the next few years, we're making significant investments there. So I think if we're successful executing on our strategy, you could see Robinhood winning by even larger margins going forward.
All right. Thank you, Vlad. The next question is for Jason. Jason, Robinhood has been profitable off and on. Do you see Robinhood joining the S&P 500 by qualifying and being profitable 4 quarters in a row?
We'd love to join the S&P 500, and I think we're focused on the right things to do that, delivering consistent profitability, growing revenues even higher. Remember, though, there are only 500 spots on this, and this is a committee decision, so it's not completely in our control, but we'll keep focused on our business, and over time, it'd be great to be part of that index.
All right. Thank you, Jason. The next question for you is for you, Vlad. What kind of progress should we expect from the company in 2024?
So I'll break it down into the 3 areas we're focused on. For winning in the active trader market, there's user experience improvements, new assets like futures and index options, as well as I mentioned in my remarks earlier today. We've been doing very well on mobile. We're number 1 in market share there. Frankly, on web, we haven't been doing as well. And so we're making a big investment there. And we're going to be launching a more professional offering geared toward active traders. So we're very excited about that. And as we continue to execute here, you should be able to track the progress and continued market share gains across all the assets that we offer, including equities, options, and crypto. For increasing wallet share, the credit card is something we're very excited about, including a special credit card for Gold customers. There's more to do on Robinhood Gold in general and in retirement, and we'll also be building and offering new account types like joint accounts. And then you should be able to track progress there by looking at our net deposits and our Gold subscribers. And then expanding internationally, we launched in the EU for crypto and in the UK for brokerage. Really, what we're focusing on is delivering more features, making those experiences more feature-rich, and building on the initial UK and EU momentum that we've generated. And then what you should see there is an increase in the percentage of our funded customers that come from international markets, as well as new funded customer growth over time.
All right. Thank you, Vlad. And Vlad, this last question is also for you. Please offer a yearly realized gain and loss tracker showing short and long-term gains. I've asked this in multiple earnings and currently have to track it manually in Excel.
Well, thank you for the feedback, and thanks for continuing to ask. There is an impact to you asking, because this is something that the team has actually been working towards. We're working hard to make great improvements to our tax law and P&L tracking this year, and we hope you'll like them. So stay tuned.
All right. Thank you, Vlad. That concludes our shareholder questions from Say Technologies. We appreciate our shareholders taking time to ask these questions of Vlad and Jason, and look forward to more next quarter. Now we'll turn the call over to Jonathan to lead Q&A from our analysts.
Certainly. Thank you. One moment for our first question. And our first question for today comes from the line of Dan Dolev from Mizuho. Your question, please.
Oh, hey, good evening. Amazing results. Congratulations, team. Really good. Making me proud.
Thank you, Dan.
Of course. Yeah. So I was actually really, really impressed by your comment, Vlad, about the 1.3 billion of net positive brokerage account transfer. To me, it looks like you're gaining massive share. I know in the past, other brokers have said that they're taking share away from you. Looks like the tide is turning. Like, what are you seeing now?
Yeah, I mean, we've been investing a lot in the user experience. We've been investing in the service. The product results speak for themselves. In Q4, we were net positive, so positive on a net basis for account transfers from every one of our major competitors. And these are big accounts coming in. So what's really amazing is I think the new functionality that we've been offering and the service quality improvements have led to people being comfortable moving in hundreds of thousands of dollars into Robinhood, which people wouldn't really talk about as much, but now it's becoming a destination for people's serious money. We're going to continue to double down on that. Again, I want to emphasize we're not getting complacent. There's a ton of work that remains to be done. And to be able to deliver these types of results and see customers coming to us from all of our major competitors in Q4, and from what we've announced so far in Q1, has just been really positive. And it's taken a ton of work from the team to both improve the product and service and get to where that's happening.
Amazing stuff. Can I squeeze in another quick question? I know it's early days, but can you talk a little bit about progress in terms of accounts and traction you're getting in the UK? Because this is, I think, a huge opportunity for Robinhood. So I just want to see how the traction has been going. And congrats again.
Yeah, no, we're very excited about that. A big part of our strategy is making Robinhood available to hundreds of millions of additional customers. And so I think we've talked about tens of thousands of customers in the EU and the UK already. The UK is still rolling out. So we're working towards the app being generally available to any customer in the coming months. And we know we've got a lot of work to do. There's a lot of features that exist in the US that our customers expect in these markets. And, especially on the crypto side, there's going to be things that we can deliver in those markets that are not available in the US. So the roadmap is full, and both of the teams have been grinding exceptionally hard to improve the product at a very fast clip there.
Thank you.
Thank you. One moment for our next question. And our next question comes from the line of Devin Ryan from JMP Securities. Your question, please.
Great. Thanks so much. Hi, Vlad. Hi, Jason. How are you?
Doing great.
Hey, Devin.
A question just on kind of interest rates and trading, and appreciate kind of the inverse correlation that you talked about. Obviously, sitting here today with materially higher customer cash balances, and as you mentioned, you're passing along the majority of that benefit to clients. So if rates eventually do start to move lower, how are you guys thinking about the magnitude that could move back into the market from kind of those cash balances? And then just what the implications are on ARPU. Is that a net positive to ARPU, or how should we think about the interplay to revenues?
Yeah, Devin, this is Jason. When we've looked at kind of the movement of trading activity relative to interest rates moving up and down, we've seen a pretty strong inverse correlation there. And so we feel really good that we've got a nice natural hedge in the business between interest rates falling and interest in trading picking up. And so in my comments, I talked a bit about the passing along a big portion of the interest rates to customers on Gold Sweep, looking at the average interest rates expected for 24 being roughly in line with 23. So we feel really good about that. And then as I mentioned, kind of most importantly, we think that falling interest rates create a tailwind for the business. So overall, we feel really good about delivering strong revenue growth in this current macro environment.
Okay, terrific. And then just a follow-up here, just on expenses. Obviously, I think the expense guide, 5% of the midpoint, is very good. And you guys sound confident you can still fund all of your growth initiatives. So how do you guys think about maybe core growth and expenses over the intermediate term, maybe next 3 to 5 years? I would assume that it would be higher than that 5%. So maybe just walk us through some of the moving parts there. And then just the second part of the question is just thoughts on leaning in more on marketing spend. I mean, you had a fantastic quarter. It sounds like you're having a lot of success with these promotions, and I'm just curious if maybe it makes sense to even lean in more there, because it would seem the payoff is very good with all the momentum you have there. Thank you.
Great question. So first of all, when we look at core expense growth this year, we actually have a plan to take that down high single digits, perhaps even 10%, and redirecting that spend to fund new growth initiatives. And then kind of looking out over the mid to longer term, in terms of core growth, we think that could be low single digits, perhaps even lower. There's still a lot of opportunity for us to drive efficiency in this business, and we think we can maintain our core business and redirect the savings into growth initiatives over time. On your question about leaning more into marketing, you're on the same page as the management team. That is the plan this year, and we are planning to spend up to about $100 million more in marketing in 2024, which is baked into this guidance. The team is really focused on bringing in high LTV customers with that spend, and we're liking kind of the early signals that we're seeing, and so we want to lean in more there.
Okay, that's really great color. Thank you, guys. Appreciate it.
Thanks, Devin.
Thank you. One moment for our next question. And our next question comes from the line of Alex Markgraff from KBCM. Your question, please.
Hey, team. Thanks for taking my question. Just wanted to come back to the account transfer and some of this disclosure around the 1% bonus offering. Just wanted to understand how the average balance transfer, I think it was 100,000, kind of stacked up against their expectations for that campaign. And then, Vlad, with some of your comments earlier, I mean, is that directionally kind of the new normal in some of these transfer campaigns, or how should we think about that?
Yeah, so I would just say, looking back, over the past 10 years, we've taken market share of the trading activity. Now we're coming for the assets too. So our focus is increasingly going to be on driving asset growth. We just completed the 1% promo for ACATS in taxable brokerage accounts. We saw over $3 billion in ACATS in from that. And now we're turning our focus on the 3% retirement promotion on rollovers and transfers for retirement accounts that runs through tax season. On average, as you pointed out, the customers transferring assets over are much larger than kind of the average account size. And we're really excited about the momentum that's giving us to start the year.
And maybe if I could just squeeze in one more, any sort of color or observations you could share with us on, the interplay between some of the spot Bitcoin ETFs that were made available in the early part of the year, as opposed to, direct Bitcoin ownership?
Yeah, Alex, this is Jason. I'll go ahead and take that. We're really pleased to be offering all 11 of the Bitcoin ETFs on the first day of trading. I think that was a great outcome for customers. So far, we're seeing nice interest in the ETFs, but we think it's additive. About 5% of our overall trading in crypto is through the ETF, with 95% still being on spot trading through the crypto business. And that's stabilized. So, we feel really good to offer the selection for customers. We think it increases, overall market interest in crypto, and also brings liquidity to the market. So, net, we're really pleased with the Bitcoin ETFs.
Great. Thanks for all the detail.
You bet.
Thank you. One moment for our next question. And our next question comes from the line of Will Nance from Goldman Sachs. Your question, please.
Hey, guys. Appreciate you taking the question. Just,
Hey, Will.
I know in the prepared remarks we're talking about, continued revenue growth and margin expansion for the year. And it sounds like, that's, the assumption is it's probably coming on the revenue side, more from the trading side than from NII, given the commentary around, rates sort of being a push. So, correct me if I'm wrong there, if there's like an assumption around better earning asset growth. But I guess my question would be, in the earlier response to one of the questions, it sounds like there's actually a lot more growth-related investments happening underneath the surface in this expense guide, and you guys are funding that with continued operational efficiencies and, doing what you guys have done an amazing job over the past 2 years of doing and right-sizing the expense base. So just maybe can you talk about sort of how much of that growth-related investments is sort of discretionary, and if we do see some kind of reduction in either near-term trading activity. I know we saw a very nice increase in seems like both options and crypto towards the end of the year. What kind of flex is there in those growth-related investments?
Yeah, I mean, I think marketing is almost always considered a discretionary spend, and so as I mentioned in my earlier response that we're leaning into marketing, that is always up to reevaluation, up or down, depending on the macro backdrop of how that changes and also how effective the marketing spend is. And so we'll continue to see how that plays out and update as we go. In terms of the cost savings that we're realizing in our core business, I said high single digits to perhaps even 10% of cost reduction there, and we're redeploying that into new areas of our business, areas that Vlad was highlighting earlier. New growth is certainly discretionary. I'd say that we've decided, though, that we're pursuing these growth opportunities, and so I wouldn't expect us to pull back there, certainly in 2024. And Will, you did say rates are a push, and I agree with that. I would say that we also continue to see strong kind of double-digit growth in net deposits, and so assets continue to improve year over year, and we're certainly starting with a higher balance at the beginning of 24 than what we saw in 23.
Yep, all that makes sense. And then just questions around thought process around the European expansion over the course of this year. What does that play into expectations, if any, and what's the latest thinking on when this could be a more meaningful part of the story over time? Thanks for taking the questions tonight.
Yeah, I'll take that one. While it's still early, we really like the initial traction we're seeing. We're already seeing a healthy portion of our user growth coming from outside of the U.S. And our focus now is really rounding out the product suite, bringing more services to customers across the globe. We think there's a huge opportunity for international to become a big part of our business.
Thank you. One moment for our next question. And our next question comes from the line of Steven Chubak from Wolfe Research. Your question, please.
Hey, good afternoon. This is Michael Anagnostakis filling in for Steven. I just wanted to start
Michael.
on SecLend here. Hey, Vlad, how you doing?
Good.
So good to hear. Just want to touch on SecLend here. Could you give us an update on where you are in the journey for the fully paid program? How much incremental penetration you think you can drive? And given the uptake has been obscured by what's a challenging backdrop, can you remind investors what you think that business can deliver from a revenue perspective in a more normal environment? Thanks.
Yeah, thanks, Michael, for the question. We're really pleased with the progress that we're making on the inputs of the securities lending business, particularly fully paid securities lending. Equities enrolled in the program increased from Q3 to Q4 from 10 billion to 14 billion. So really pleased with that. Added 500,000 customers, into the program, sequential quarter basis. I still think that there's quite a bit of headroom for us to continue to penetrate and get securities lending fully paid into the hands of our customers. It's a great way to augment yield, as we all know, and the team's hard at work to make sure customers understand that. I think that's showing up in the progress that we're making. At the moment, the rebate rates that we're seeing are lower across the industry, but over time, I think as that normalizes a bit, the progress that we're making on inputs is really going to show through from a revenue basis.
Yeah, and we think we still have room to run, and we could make meaningful progress towards heightened penetration this year.
Got it. Thank you. And then I guess on my follow-up, I wanted to briefly hit on expenses again, maybe in a different vein. Now that the headcount reductions are largely in the rear view, how should we be thinking about the direction of travel for expense per head, given the scalability of Robinhood, coupled with the investments you're making, particularly international, where I'd imagine that may drive some incremental headcount growth. Thanks.
Yeah, so the plan on headcount is to be roughly flat to slightly up this year. So we feel really good about the headcount posture that we have. In terms of the expense per head, there does continue to be opportunity for us to get even more efficient. Today the vast majority of our headcount is in higher cost U.S. geographies, and there's opportunity there over time. I think the real opportunity for us on headcount is really just increasing revenue per employee, and there we feel like we're just getting started. There's a lot of opportunity for us to leverage the fixed cost infrastructure that we have at the company as we grow the business over time.
Great. Thanks for taking my questions.
You bet.
Thank you. One moment for our next question. And our next question comes from the line of Michael Cyprys from Morgan Stanley. Your question, please.
Hey, good evening. Thanks for taking the question. Wanted to ask about crypto, an area you guys continue to invest in. I was hoping you could elaborate on the investments you're looking to make here in 24 and beyond, as well as how you envision crypto contributing to your business as you look out over the next 3 to 5 years.
Yeah, I mean, we're investing a large amount into crypto, both in the EU and domestically. I think there's a ton of improvements left to make. Last year, we were really focusing on the trader experience and providing clarity, which we believe we've made significant progress on, in just how much better our pricing is than that of our competitors. And we've seen that reflected in crypto trading market share. We've also seen, and you probably caught this announcement just in the past couple of days, our on-ramp technology, Robinhood Connect, we've been making meaningful progress there. And so if you think about all that we have to be really, really good at to power our retail crypto offering, we've gotten really good at quick money movements, getting your fiat dollars into crypto as seamlessly as possible through building out our transfers product, delivering those funds into non-custodial wallets seamlessly. And so Robinhood Connect really leverages that and turns that into a powerful B2B product. We announced a partnership with MetaMask a couple of days ago, and that's been one of the market leaders in non-custodial wallets. And they do a really nice thing where you can actually compare the use of different on-ramps, and they sort it by which one is the most cost-effective. And when you kind of look on that page, you see Robinhood at the top. So I think it really shows the investments that we've made in our platform, and it's reflected in us being able to offer lower costs, not just for our consumers, but for business partners as well. And I think you'll see us chipping away at this bit by bit. We think we can be the leading player in bridging the worlds of traditional finance and crypto. So there's a lot more where that came from.
Great. And just a follow-up question, if I could, on the expense side, you guys continue to drive efficiency in the business. Heard you mention you can reduce underlying costs in 24 by up to 10% or so, understanding you look to reinvest that elsewhere, and over the medium term, you could potentially look to grow expenses at a low single-digit pace. I was hoping you could maybe elaborate on the top contributors to that level of efficiency, the specific steps you're taking here in 24, and how those steps may differ as you look out over the medium term to hit those particular targets, if you will.
Yeah, sure. I mean, we've been really kind of fine-tuning our skills over the last couple of years in terms of efficiency. We're focused on business process efficiency using technology. We have a team that we've spun up that helps the business find opportunities to improve efficiency. One project we just finished was on recruiting, and we think we can save 20 to 40% of our time just on the recruiting process from optimizing our business steps that are involved. As I mentioned earlier, I think there's an opportunity for us over time in terms of place of work. With the vast majority of our employees working in high-cost locations within the U.S., that's something that we can make progress on in 24 as well as beyond. So those are the big levers that I'd point to.
Great, thank you.
Thank you. One moment for our next question. And our next question comes from the line of John Todaro from Needham & Company. Your question, please.
Great. Thanks for taking my question, and congrats on the beat. I guess I have two here, both on the crypto components. On the Bitcoin ETF versus buying Bitcoin directly on the platform, you'd mentioned earlier about 5% of overall crypto you thought was flowing into the ETF. So was that 5% that migrated away from buying Bitcoin directly, or was that an additive 5%?
Yeah, we saw it was mostly additive. There were some traders that sold out of spot and got to ETF, but that was really more of the exception. And we also offered the ETFs in our retirement accounts, which accounted for some of the pickup as well. So overall, we don't view this as cannibalization. It's additive, and we think it's really good for customers as well.
Great. Thanks for that. And then just one more. On the MetaMask integration, I think that's really interesting. It does kind of pivot Robinhood to be more of that fiat on-ramp to the ecosystem, DeFi, on-chain stuff. Just curious, though, what is kind of the monetization strategy with that integration, short term and then longer term?
Yeah, so we collect fees on the activity of the on-ramp. So that's the primary source of monetization, and then any trading on our platform for that on-ramp also would show up in our transaction-based revenues.
Got it. Understood. Thanks.
Thank you. One moment for our next question. And our next question comes from the line of Patrick Moley from Piper Sandler. Your question, please.
Yeah, thanks for taking the question. I just had one on Robinhood Gold. Just hoping you could update us kind of on how you think about pricing there. With the expanded offerings that you're adding, $5 a month seems, like somewhat of an inexpensive price to pay. So just hoping you could update us on your thoughts there. And then maybe as we look internationally, how you sort of think about taking the subscription model overseas and how you see, that playing out with a different kind of geographic customer mix. Thanks.
Yeah, this is Jason. I'll start, and we'll see if Vlad has any additional color. We love the Gold program. Gold members have an ARPU that's multiples of our average ARPU. And you're right, the $5 a month is just a screaming deal. We want it to be obvious for every customer that they should be a Gold subscriber. So we're paying close attention to the behavior of Gold. They're bringing in more net deposits. They're using more of our products, and they do all of that with a relatively modest monthly subscription. We'll evaluate pricing over time, but all in, we just love the economics of the Gold subscription. And I do think over time, there's an opportunity for us to take Robinhood Gold internationally.
Yeah, I don't have much to add there. I think that, other financial service companies offer these gold perks to their high net worth customers. And usually there's balance requirements. You have to have millions of dollars in your account. And so we think it's very mission aligned to provide those same types of services to any customer for such a small monthly fee. I think it really has the potential to disrupt the wealth management industry just in the same way that we've been disrupting trading. And our focus has been on making the experience even better, getting the adoption rate up, making it easy for new customers in particular to onboard onto the product. We've seen really healthy improvements in sort of like the first week attach rate of gold among new customers. And we think that there's further improvements, and we've got a lot slated for this year to make the gold offering even better.
Okay, that's great color. And then just to follow up on the equities and options take rate, those have been coming down for the last couple of quarters. Options fee capture seemed to stabilize somewhat in the fourth quarter. Equities declined again. So just kind of as we look out to the next year, how do you think, or how do you see the take rates there? Kind of what's the trajectory over the next couple of quarters, I guess, is the question. Thanks.
Yeah, you bet. I'd zero in on options for that. For the back half of the year, both Q3 and Q4, we were running at 41 cents per contract. And in January, we're in that zone, but the mix is improving a bit. So we'll have to see how the year plays out. And, nothing really to highlight on the equities side.
Okay. Thanks, guys.
Thank you.
Thank you. One moment for our next question.
They're taking a lot of questions, yo. This is different from Pounds here.
Our next question comes from the line.
Yeah, they are.
Worthington from J.P. Morgan. Your question, please.
Hi. Good evening. Thanks for taking the question. As you look to election season in the SEC, do you expect the SEC will execute on the market structure changes proposed last year for equity markets? And if so, do you think that equity market structure changes will differ from the original proposals, or are they likely to stay on track? And which are kind of most important to Robinhood here?
So we think a fair amount will probably be executed heading up into the election season. I think Best X is an important aspect to that. We participated in the comment process, and we feel like a fair number of our comments were incorporated, and that's baked into really the expectations that we have for 2024.
Okay, great. Thank you. And then on TOAs, you mentioned that the TOAs were positive for the major brokers. Are you seeing positive transfer of assets from the major crypto providers as well?
So it's a little bit difficult to reconcile the crypto activity in that way because a lot of people use crypto or Robinhood as an on-ramp to purchase crypto and then kind of use it in the Web3 ecosystem. So it's a little bit different of a behavior than brokerage ACAT transfers, where those assets tend to sit and accumulate. So I don't think you can make really apples to apples comparison.
The one thing, Ken, that I'd highlight is that the crypto volume on Robinhood nearly doubled in Q4. So really seeing strong engagement and increasing market share.
Okay, great. Thank you much.
Thanks, Ken.
Thank you. One moment for our next question. And our next question comes from the line of Benjamin Budish from Barclays. Your question, please.
Hi, good evening, and thanks for taking the question. I wanted to follow up on an earlier question about taking the subscription model overseas. Maybe can you talk a little bit about, now that you're rolling out in the UK, what the revenue model looks like over there? I mean, I think we all understand it will look somewhat different than the US, but can you kind of give us any kind of color on what that should look like as the platform ramps over there? What are the kind of main sources of revenues? Thank you.
Yeah, Ben, I'd say, in the UK, we know that that payment for order flow isn't allowed, but really all of the other income streams are available there over time. So margin, fully paid securities lending, certainly, interest on cash. And so, I would say as we look internationally, the revenue characteristics and ARPU, in some jurisdictions will be a little higher than the U.S., some a little lower, but on average, we think that the income potential is pretty much on par with what we're seeing in the U.S.
And we know that market in particular is very used to subscription products. So we're definitely hard at work crafting a great gold experience for international.
Yeah, and remember that payment for order flow is actually a pretty modest portion of our revenue for equities trading in the U.S., and so not having that in the UK is not a big concern.
Got it. That's helpful. And maybe one follow-up, maybe sort of connected. Can you talk about the activity you're seeing in your 24-hour markets? I know some of the appeal is for overseas investors who are far away in different time zones, but you've talked in the past about expanding access outside of the traditional trading hours. So what sort of activity are you seeing there? What kind of uplift might you see as you kind of continue to roll out more stocks to that offering? Thank you.
Yeah, I think the team's done tremendous work making the 24-hour market offering better and better. We started with a pretty limited set of names roughly a year ago. They've been adding names by the hundreds. So we have somewhere around 900 tickers available in the overnight trading session. Hundreds of thousands of our customers have used the product, and we've seen particularly strong activity around earnings when really Robinhood is among the only places available to trade some of these tickers. So we're going to continue to invest there. I think there's a lot to do, particularly as we improve the active trading tooling and offerings, because this product is resonating particularly well among our key active trader customers.
Got it. Thank you very much.
Thank you. This does conclude the question and answer session of today's program. I'd like to hand the program back to Vlad Tenev for any further remarks.
Yeah, thank you all. Great questions. And the team is already hard at work getting 2024 started. So not much holiday rest here for Robinhood. We look forward to seeing you next quarter.
Thank you, ladies.
Cool.
All right. That was a hell of a call. They answered a lot of questions. We got a lot of juicy stuff.
Very good stuff.
Well, let's talk about it for about 20 minutes, then we'll get you guys out of here. Thank you, everybody, for joining. What were your raw thoughts? And then I'll get into some things.
Yeah. Can I show my screen real quick, too?
Yeah. Let's do it.
Okay. Let me go back here. I want to go to here. Okay. So first off, again, the numbers look amazing. I love that they're looking to incorporate gold into everything. And I know from a previous post from somebody on X that they were talking about how Robinhood was doing a beta at a higher price too, maybe doubling the gold membership with the increased incentives. So I think that this is going to be somebody said it in chat and you posted it, an Amazon Prime type thing where it's like, oh, well, I mean, if you have Robinhood and you got more than like a couple of grand, you have gold. You pay for gold because the benefits are too good.
Right.
And so, and I love too, the desktop app that might not matter. A web app might not matter to a lot of people, but I can tell you people that have millions of dollars like myself want a web app. I don't want to be like pulling up my phone and being like, oh, hey, let me just click. I've got a 46-inch monitor and 327s. I need a web app. So if you want the big dollars to move over, the fact that they're focusing on that is brilliant. I loved everything about the call. Every one of these metrics look amazing. And the stock is up about 10%. And the best part about this, let me show you this real quick. So the thing I love is that all trading volume is underneath of us. Even this wick right here, or this like little bit of volume shelf, we're above all of that now. We're right up here. And so if we can, like I said, if we can start creeping above 14 and turning that into support, even right here at the .618 fib level, this green one, We have never, if you go to the daily time frame here, we have never went above that and turned it into support. We've always went back under. So the fact that we're up here again, if we just sit here, even if it takes days, it's bullish as F. So I'm
the trading volume needs to be below that level for it to turn into support, essentially, correct?
Yeah, well, ideally what you have, so the great thing about this stock versus others is there is no trading volume above it. It shows you how much they've grown. This company grew down here. Everything up here, there's no volume at all. It just fell off a cliff when their IPO went out, but it grew down here. There's very little trading resistance volume up here. Like again, between this next fib at like 1730 and then up to 1830. And then after that, it's the next fib at 30 and volume kicks in at 33. But those will act as resistance points. But right now we have all of it underneath of us. So we just have this massive mountain of support. And now this thing is finally going to be resting on top. And that is where you want to be from a technical level. So they not only crushed it, it not only looks beautiful, and then they have a great forward guidance and a forward vision, in my opinion, with gold and the IRA transfers that probably aren't going to slow down. And their name's going to be talked about a lot more. And then when they get the desktop app, people like me are going to move over a couple mil. Hopefully it's even more by then. Hopefully it's 4 or 5 mil. And they're just going to get more powerful. It's like anything, man. The better you do, it's the law of attraction, right? And that's what's headed our way in a big way. I'm ready to make some money.
Yeah, we're in the stock to make some damn money. And this was very exciting because what you just explained was the technical levels. But as you say on your Twitter account, the technicals don't mean shit unless there's anything fundamental about the company. And this Q4, we needed something fundamental. And in that earnings call, I think we got something really fundamentally sound about the future of their growth. So a couple quotes I want to say. January, they said they did $4 billion.
One sec. Real quick a minute. Sorry to interrupt. I got to grab food. I'll be right back.
No way. You got it. Okay, cool. In January, I'll just get him out of here while I'm talking. In January, they did $4 billion in deposits in that month alone. So in the last 90 days, they did 4.6 billion. January, they did 4 billion. Absolutely incredible. That means that if they're doing close to 4 billion a month in deposits, I mean, let's just be conservative. Let's say it's about 2 billion. They're going to do 6 billion next quarter in deposits. That's money onto the platform that's not leaving because 1/3 of that, or at least, a third of that's likely not leaving. And if people enjoy the product, it's not going to, a lot more of it's not going to leave because 1/3 of that, the CFO said, was simply because of IRA transfers, brokerage transfers. So there's a lot of money that's coming onto the platform that's now locked in for a long time, and people are probably not going to want it to leave. That was one thing that was important. January had 60,000 gold members. That's huge. As Jesse was talking about, they're probably going to offer an upper tier, as they said on the call. One of the analysts was like, dude, it's $5. Like, this is ridiculous. And they're like, yeah, this is part of our mission to democratize finance. This is something that you would have to pay a lot of money to do from other brokerages. You would have to pay some custom subscription. We're charging $5 a month. There is no reason that anyone shouldn't be taking up this $5 subscription offer. So 60,000 subscribers already in January. If they keep up that pace, that's going to be 120,000 in the next 3 months, which is already 20% above what they had in Q4. That's going to be incredible.
If they double the fee or do like a 2-tier thing, yeah, it's going to be awesome.
It's going to be awesome. And then 2 things from the slide deck. I was looking deep into the numbers, but here are 2 top level things. MAU is down year over year, but that doesn't really matter because quarter over quarter, it's back up. So they got it from 10.3 to 10.9. Likely next quarter, if they keep adding all these users and people keep coming back, that's going to get close to that 11.4 level. So we're going to see MAUs get back. And then crypto, we finally got our answer for how much was traded in December because they didn't put up the metric.
Beautiful.
6.5 billion.
It's only going to grow. It's only going to grow. And that's just at the end. Look at September. There was nothing. It was dead. Most of the year it was dead, and it's going to crush it now. It's going to get nuts.
It is going to get pretty nutty. I mean, September 1.2, they basically 6x in 3 months. And if Jesse's right about crypto and you got the halving event and the 17 other thousand catalysts he talked about, and that keeps going up, most people are not going to, I mean, some people will sign up on Coinbase. A lot of people will, but a lot of people are also just going to want to quickly buy some crypto on Robinhood without having to go through all the fees and all the hard stuff about signing up to a wallet. Yeah. Robinhood's going to be there.
Yeah. And I'm right about it, man. I've been in this stuff for about 8 years almost now. So I've been pretty well versed.
This is exciting. Now, let me ask you about this. We talked about the call. I think that they answered the questions really well. One quick thing on Bitcoin. They said Bitcoin ETFs are additive, not taking. So they make more money off people trading Bitcoin, not the ETFs. But in their, the CFO was just like, well, this is just helps our clients get another option. But we, as Jesse said, more people are still going to trade on Coinbase, even though there's an ETF. So it's not necessarily taking away anything. It's just more additional volume for the company.
Yeah, and I do think it's a narrative too that brought customers to them. Again, I think I saw a ton of people on social media that are like, "Screw this, I'm going to Robinhood."
Right. $12.90 on the stock, up 8%. I don't think there's a massive reason there should be a sell-off because the narrative has changed. Whereas something you don't. So that was my question. Do you think what do you think is going to happen tomorrow?
No, I think, like I said, looking at this chart, if you pull it up again real quick. We're above this volume shelf, right? Right here, going all the way down. We have a mountain of volume underneath us. We're above this now, and all we need to do is prove that in the week ahead. I don't care if it even chops down a little bit. We'll have found support at these levels for the first time in the history of the company. Because even back over here, if you look, this fib extension, we didn't find support under here. We fell under it. We tried to go up. We fell under it again, stayed under it, went above it, fell under it, stayed under it, stayed under it, stayed under it. This company has never traded above this .618 line and stayed there. If it does that for a week, it's game over. We're rolling up.
Which is what price level? 1280-ish? Is what you're saying? 13?
The first levels will be about 1420. That's where we'll hit resistance at this next fib. And then it's up to 1732. Maybe that happens closer to the middle of the year. And then maybe by July, August or something like that, we could see 30. These things can happen sooner. I mean, Palantir, I bought that at 7 or something. And then it was in the 15s really quick.
Yeah,
so it can
go in 2 months.
You can go 100% really fast.
Yeah. And again, I think both of us agree that the narrative has changed. People understand. The analysts I think we are going to get some upgrades from those analysts.
Oh, yeah. They're going to chase. And that's the best part, too. You want a super negative environment because the asymmetric upside is huge and everybody starts chasing and people start raising and they start initiating and you've got more analysts following it, more chatter. All of it becomes positive. It's an upward spiral. We're getting ready to start it.
This is awesome. Guys, Jesse's Twitter and YouTube in the description. If you're not following on YouTube or in the chat, I just put it in. Please make sure to follow him on YouTube and subscribe. He just started YouTube. He's going to crack 10K in a couple months, maybe even sooner than that. So absolutely incredible, astronomical growth. It's going to be really exciting to see this whole play out in terms of Robinhood, his Twitter as well in the chat. And yeah, Jesse, I guess we'll see over the next coming weeks what happens and we'll keep going from there.
Yes, this is a sweet one. It was way better than PayPal. Hey, you got to ring the bell.
Oh, we got. Do we ring the bell? Okay, we can ring the bell.
Ring the bell.
You ring the bell.
And then we'll just end the session, and that way you can't go to Wall Street bets this time.
Right. This is how we end it. Let's do it. Thank you, everybody, for joining. This is awesome. This is the new age of finance where two random guys that have never met each other can hop on a YouTube stream, analyze this stuff, hopefully give you guys a lot of value. Jesse broke down the technicals in a way that, it's insane value. So please make sure to subscribe to his YouTube and Twitter. Check me out on YouTube and Twitter as well. Like and subscribe. Twitter's in the description. And we'll see you guys next time.
All right. Love you, brother. See ya.
Thank you. Bye, everyone. Have a good one. Good night.
Bye.